Good morning, everybody. Welcome back to another episode of the Market Open. It is Thursday, October 24th, 8:47 a.m. Eastern Standard Time, and we've got a lot to talk about. This is the day after Tesla's Q3 earnings, and ladies and gentlemen, they crushed. They smashed expectations. Stocks up about 14% right now. I am going as far as saying I don't see a single red flag in these earnings. Are there bearish concerns for the company long term? Yes, as there are for any company. But in terms of this Q3 earnings, they smashed. And I think that smashing of these earnings, along with the jobs data that we got 17 minutes ago, initial jobless claims came in at 227,000 versus 247,000. So 20,000 less people filed for unemployment than what the market expected. That means less people are unemployed. That means more people have money. More people have money means they can spend. More spending means better earnings growth, is leading to a bit of a pre-market pump that we are getting across the entire global capital equity markets. And we're seeing that right now. Tesla, 243, 14%. You know, I posted this on Twitter. A lot of people are like, oh, well, we're back to where we were 2 weeks ago. It's like, yes, but it's better than being lower than where we were 2 weeks ago. It's like, would you rather be at 200 or 195, or are you back to be where you were 2 weeks ago? And 240, by the way, again, if you load it up at 130, 140, 150, 160, 170, it's an incredible return from the lows, even if year to date it's only up 7 or 8%. So I think getting back to 240 is very good. And look, we're going to talk about those earnings. There's a lot of things to get into. If those earnings are interpreted by the street as strongly as I think they could be, which we're already seeing price target upgrades as we get into the beginning of the show from a variety of different analysts, then maybe 14% isn't where it stops. I mean, maybe this thing is headed back to that 260, 270 level, which was its 52-week high. S&P 500 up about 0.5%. It was down 1% yesterday, the worst day it had since September 6th, so in about 6 weeks, and rebounding a little bit right here in the pre-markets, up about 0.5% off some of the good jobs data that we got. Nvdia is up 1.27%. ServiceNow, decent earnings, up about 3%. Again, Tesla up 14%. Apple's kind of flat. We'll talk about Apple in a little bit. Boeing down about 2%. Boeing had some stuff happen yesterday that was not the best. TSLL, which is a 2x leverage fund on Tesla, is up 28% because of those Tesla earnings. SoFi is up 3.3%. I actually have no idea why SoFi is running. So if anyone knows, let me know. Maybe there's a news I missed on them. I'll check it out in a second. But 1077, we know $11 would be a big thing for SoFi. I think the all-time, not the all-time high, but the 2023 high was 1145. So if we crack that, I would imagine the volume shelf resistance really starts to deteriorate, and then maybe there's blue skies into that 12 to 15 range. So SoFi getting some love. IWM up about 1/3%. The Q's up about 1%. TSM down a little bit. Robinhood up about 1%. You're just seeing a ton of momentum in the broader markets. Google's up 0.5%. Again, Tesla up 14%. Meta right here is up about 0.5%. We're seeing momentum, and it looks like that momentum is likely coming because Tesla had an incredible earnings, and it is setting the bar high for the rest of big tech. You know what's funny? A lot of people felt that Tesla would be one of the laggers out of the Mag 7 just because we know, that their numbers were not going to be the best. And granted, they missed on revenue slightly, but what they outperformed on, which was the gross margins, which we'll get into, is what really set the stock on fire. And as soon as the news came out, the market was like, all right, if this is what they're going to do, and again, in terms of expectations, then we kind of have no choice but to allocate more capital to Tesla. SoFi's up because of Lending Club blowing earnings. That's actually a good point. That is fair. Lending Club, I'll pull up a couple of pieces of data on them, but I believe, if I'm not wrong, I read a little bit of their parts of their transcript. Loan growth is just doing great, which it should be doing great, right? Because rate cuts are on the way, and rates have already been cut. And if that's the case, that's obviously bullish for SoFi. Note has been talking about how bullish it is for SoFi for rates to come down for lending, and obviously SoFi is one of the biggest component of their business is lending because they still are a bank. So that might be a reaction to Lending Club. Where's Lending Club right now? LC. That stock is up 16%. Okay, yeah, it's definitely a reaction to Lending Club. It is definitely a reaction to Lending Club. SoFi is getting a nice 4% bump just off this Lending Club 16%. I mean, again, dude, with all the financials, they've done great. If the financials continue to do good going into 2025, then maybe SoFi really does have a shot of breaking into that $15, $20 range as we get towards the end of the year, as their growth picks up and as obviously lending continues to do well. And then also, after we talk about Tesla, we've got Palantir. with a new partnership yesterday with L3 Harris. Actually, a really good partnership. Alex Karp and the CEO of L3 Harris will be on CNBC at 4 p.m. or 4:20 p.m. On the market close. So I'll be streaming that live, and they will be talking about their new partnership. It has to do with defense. Stock is up 1% on this. If Palantir was $30, I think the stock would be up a lot more. But given the stock has run so much, this is not the type of partnership that's going to like explode at 5%. But it's a really good partnership. It's an important partnership in the defense contractor space, and it's just another reaffirmation that Palantir is the software platform that a lot of these defense contractors have to use in a meaningful way. All right, folks, we've got a lot to talk about. Thank you, everybody, for being here today. Let's get into it. Doug, what's up? Merv, Tesla, Charles, Freedom Fuels, TJ Riley, Blake Anderson. I own TSLL. Well, you should be happy today because that one's doing nice. BSOV, Rakesh, Oris, Andrew, Wealth Basic, Iceman, JJ, Broccoli Bob, Colorblind Collector, Martin. Thank you, everybody, for being here today this morning. P. Nick, what's up? What's up? Benny, Tom Brady, Bobby G, Peter Jerk. Thank you, everybody, for being here today. All right, so let's start with Tesla. Real quick, jobless claims numbers, because we'll just do that real quick because not too much news there. But jobless claims came in at 227, so that was lower than 247, which is good. Again, I mean, it helped the market continue to maintain the momentum it already had in the pre-markets. What this simply means is that less people are filing for unemployment, and if less people are filing for unemployment, then you're going to get more people have money. More people have money, more people can spend, which is not a bad thing at all. So that's the big news we got from the initial jobless claims. We get CPI in November, the next CPI. So we got about 3 weeks left until that CPI. And if that one can go below 2.4% with initial jobless claims coming down, then we're heading into a decent macro landscape. All right, Tesla. So a lot of parts of the story. I want to cover all the different parts, but let's start off with kind of the main parts. The is gross margin. So what Tesla showed on this earnings call was a 72-cent EPS beat versus a 72-cent EPS versus 60-cent EPS expectations. So they had a 12-cent beat, and they had a slight miss on revenue. Now, you would think that because Tesla is in such a precarious situation that they can't miss on any numbers for the street to get upset. But immediately when these numbers came out, the street didn't really care about the revenue miss because what mattered to the street primarily was gross margins. And gross margins came in ex-automotive at about 17.3 versus the 16.4 that the street expected. And then boom, that right there set the story to be like, all right, so we've got gross margins that seemingly have bottomed in the last quarter, and you've got deliveries that were higher than expected. Now, why did gross margins bottom, even though they were cutting prices and doing this 0% APR stuff, all that good stuff? Their COGS, their cost of goods on an actual Tesla came down to its lowest ever at, I believe, around $35,000 to produce the car, $35,100. So Tesla writes, our COGS came down to its lowest level ever at $35,000. In order to continue accelerating the world's transition to sustainable energy, we need to make EVs affordable for everyone, including making the total cost of ownership per mile competitive with all forms of transportation. So that was the first thing. Margins seem to be bottoming because COGS come down and to the lowest level, which means that you're going to get operating income that is just going to completely outperform. Having said that, when we look at things like gross margins, what also matters is the operating margins. And this one was really surprising, but they did what they had to do to prove that they are not messing around here. Look at this. Q2 2024 operating margins were 6.3%. Q3 2024, 10.8%. I mean, this is just a 323 basis point increase is not easy to do. It shows incredible operational efficiency and really excellence in terms of how they're managing the business. And they're doing a pretty good job. And as a result of that, that's why you see the stock going a bit higher. As Martin says right here, gross margins led by battery and reductions in auto. So when you see these numbers, as the stock begins to think, where is it going to go? It's already down, or was already down from 270 to 213 yesterday. So anyone who's short Tesla, I mean, I really started thinking about it, and it kind of made no sense. We talked about this on the market close before earnings came out. Why would you be short something that already fell so much? You would need horrendous numbers, just disgusting numbers to justify the short continuing to go down. And in this case, it just did not make any sense to be that bearish, given we had numbers on deliveries that were just better. So you had gross margins that were up. You had automotive gross margins, ex-automotive credits that were up. You had cost of goods sold coming down. You had operating cash flow of $6.3 billion, free cash flow of $2.7 billion. And then you also had, when we're talking about margins, Tesla achieving positive gross margins for the first time ever on Cybertrucks. Boom. There you go. From the deck, Cybertruck production increased sequentially and achieved a positive gross margin for the first time. Again, a lot of people might be saying these aren't the biggest pieces of details in the world in regards to the Tesla story. These are things that are already should be happening. But look, the stock is not up 40, 50% year to date. They're not up 200% year to date like Nvdia. They are trying to get a footing. Tesla's trying to get back to where it was in 2021 when it was at $1 trillion, which at the time it probably wasn't justified. But now it's starting to put the pieces together to say, hey, we can become a true $1 trillion company in the age of AI. I mean, when you think of the AI story and the narratives that's playing out, I don't understand how Tesla is not a winner in that story, but they're a car company at the end of the day, and they have a lot of these idiosyncratic things they need to resolve, like gross margins, before they can get to beautiful and 85% software gross margins via FSD. And so until that happens, they need to appease the street with these core numbers, and it looks like these numbers are starting to get in a much better place. So you had the Cybertruck news that was very important. You had the operating margins that were very important. Again, EPS was 72 cents versus 60 cents, 25.18 billion versus 25.43 billion. So a very small miss in regards to revenue. And then you had two things that Elon said, which if he's, being a little, what's the right word? Imaginative about it, then the street's probably not going to be happy in 2026 or 2025. But if he's, being serious, like actually serious about this, then these were two big quotes that we got on the earnings call. The earnings call itself was kind of boring. We didn't get anything that interesting from it outside of these two quotes. But Elon was in a happy mood. He wasn't like in a sort of like, screw you, I don't want to talk type of move. But he said these two things, and these two things is what really matters. So number one, he said, I think we can grow vehicle deliveries 20 to 30% next year. As soon as he said that, my ears perked up, because as soon as this was in like the first 3 minutes of the call. So Elon intentionally wanted the street to realize that they are going to get back to growth. Now, it's not 50% growth like it was in 2019, 2020, but 20 to 30% off of a 1.8 million base is not a bad thing, which means they're going to be growing up to 2 million units if Elon is correct on his thesis on 20% vehicle delivery growth in 2025. Additionally, I didn't put this on the tweet right here, but in the shareholder deck, they said, we believe we can achieve year-over-year growth in deliveries in 2024. Now, that's a big deal as well. Why? Because after that horrendous quarter they had in Q1, which was only 385,000 cars delivered, they would have had to put up massive, massive numbers just to be able to get some year-over-year growth in regards to like 7 to 8% from 2024 to 2023. Q2 was okay. Q3 was a lot better. Now it seems like Elon's saying, hey, we're going to grow at least 512,000 cars next quarter, which is what's needed to grow at least 1% year-over-year growth. And if they do that, at least you're going to be getting 2024 year-over-year deliveries growth that is positive and not negative. So even though it's not 20 or 30%, which he's projecting for 2025, it still is positive, which is another really bullish thing. That's why I'm saying I can't find a single red flag in these earnings. I really can't. And then Elon said, we should reach volume production of Cybercab in 2026. And then he clarified and he said, not just starting production, but volume production, which is also a big deal to me, because one of the biggest concerns of 1010 was like Elon didn't really give that much guidance and details in terms of what Cybercab's going to look like from a production standpoint. And now in the earnings call, he finally said, 2026, we should be able to manufacture tons of these things, which means 2027, they should be able to launch meaningfully in terms of like a full robotaxi network. So you've got Cybertruck gross margins that are positive. You've got operating margins that are positive. You've got general gross margins that are positive. You've got vehicle delivery growth projected to be not only positive for 2024, but 20 to 30% growth going into 2025. And then you've got the Cybercab that looks like it's going to start ramping in 2026. It was one of those earnings calls where you're just looking at every single angle of what they're saying. And if they can get the FSC story right, and then you've got Optimus as a call option, that maybe there's some progress on that in 2025. It's just hard to imagine, with interest rates coming down, that Tesla's not going to be in a good situation. And then finally, the biggest thing that I was worried about from the Q2 call was them affirming and sort of validating that there will be a new generation vehicle, that $25,000 to $30,000 car, that will get into production in H1 of 2025. They said that for the past 2 quarters, and a lot of people were kind of just like, hey, what if they don't say that again, right? What if they take that out of their guidance? And on the earnings call and in the deck, they unequivocally confirmed they will be starting production of, basically, in my opinion, the Cybercab with wheels, right? And so like stuff that people easily could buy. They kind of already have the design and the form factor of it. They just need to make it buyable for people that actually want to buy the car versus get into a robotaxi. And it looks like if that gets into production, which they said they will get into production again in H1 2025, which means maybe H2 we get the release, if not H1 2026, which is on the right time trajectory, then you've got another growth curve of this Honda Civic, Toyota Corolla competitor that I would even want to buy if it's 25,000. And boom, I think you've got a ton more demand coming into Tesla. So it's one of those things that was just an exciting earnings. It was an incredibly strong call. And until Tesla gets to the FSD, AI, robotics reality that everyone thinks they can get to, for now, they have to put up the margins that are necessary for the street to be excited and put up the actual vehicle delivery growth, which was the bread and butter of this company for the past couple of years, in order to appease the street. And it seems like they are getting back to doing that, which is why I think they absolutely smashed earnings. If anyone has a red flag from these numbers, let me know, because I don't see them. And maybe you can nitpick here and there, but in terms of a real red flag, like this was like actually bad, I didn't see it from these earnings. It seems like they are back and ready to grow. Here's what Dan Ives had to say about Tesla, and then we'll keep going from there.
Here, Dan Ives, Wedbush Senior Equity Analyst covering tech. I know you're going to want to talk about Palantir eventually, but let's talk about Tesla because those numbers are out now. Revenues are light, but hey, earnings. What matters more here?
I mean, the whole story is about gross margins. I mean, that's really been the headwind on Tesla stock. I'd say $30 to $40 of a headwind to the stock. You saw gross margins. I mean, this is a blowout. Not even us thought that we could see a gross margin where essentially is anywhere from a 200 to 300 bit beat. This shows price cuts now under control. Margins start to tick back up. You start to get now toward 20% gross margins. I think this is the start of the stock. Ultimately, this will have a 3 in front of it as a stock as the gross margins start to trend up, and as well as growth into next year from a delivery perspective.
So does the robo-taxi stuff matter?
Look, I think longer term, I would think the longer term story here is autonomous, is robotics, is essentially the AI play. Street, what they needed to see here, show me margins. You cannot have margins going toward 13, 14%. Now that margins are starting to level off, that is so important, not just from a cash flow perspective, but showing the worst is in the rearview mirror. And when you think about all the bears and all the negatives, it comes down to deliveries will start to uptick. China, I think, is a source of strength in the quarter. But that gross margin, it's a Goldilocks for any bear. Okay, it's a Goldilocks for any bull. The bears, it's kind of a nightmare for, because that was ultimately the core of the story.
Yeah, to your point, free cash flow, $2.74 billion. That trounced expectations for Q3. But some of the details we're getting here on the outlook, I think, are also really notable. They're basically saying, despite the ongoing macroeconomic conditions, we expect to achieve slight growth in vehicle deliveries in 2024. Also talking about energy storage deployments that are going to more than double this year. But perhaps this is most notable because I know you've written about this, saying plans for new vehicles, including more affordable models, remain on track for start of production in the first half of 2025. What should we take away from that when I know a lot of folks have been looking for a sub $30,000 vehicle? We're even expecting to get some details on that at the robotaxi event, which maybe was unrealistic.
The linchpin to the story from a growth is a sub 30K vehicle. And I believe that hits by middle of 2025. That's the growth. I mean, that's ultimately, you're talking about like single digit growth this year. That's how you get to 10, 12, 15% type growth. Margins under control. That's what the bulls want to see. And I think the fact that they actually doubled down on, and I expect clearly on the conference call, they'll focus not just on margins, but more details around that vehicle.
And they did. Elon spent a good 2-3 minutes really talking about it, explaining it. And I think that's what also appeased investors. Basically, all the investors that felt they didn't get enough information from 1010, they got pretty much everything they needed out of the earnings call yesterday.
Look, Robotaxi Day, we could argue, many would say that they're disappointed. I believe ultimately that shows the vision, the autonomous and the AI vision. Street need to ultimately see, stop talking the talk, walk the walk, show the margins. They did it. And Musk really has, I think, stepped up in that capacity.
In what's been a year of softness for EV demand and obviously more adoption of hybrid vehicles, for example, are we going to look at Q3 as an inflection point for that changing, especially when you look at results like this today? Or is this a Tesla specific story as they do deploy more manufacturing techniques, more software, more AI, both internally and externally?
I think it's a combination. I mean, you had you look at GM's quarter. I mean, that was a Juan Soto-like quarter for GM. And then you look at what we've seen in terms of Tesla. I believe this is the inflection point. This right now is the start to me of what we're actually starting to see from a gross margin perspective. The renaissance of growth come back. They've essentially been in between two growth waves. Next year, you have a sub 30K vehicle. Then the autonomous and AI vision plays out. And that's, in our opinion, that's how you get to trillion and a half market cap. And right now, as we've seen, like, look, New York City cab drivers bearish on Tesla.
Okay.
I mean, look, Dan has a good point. Everyone that was bearish on Tesla coming in, you kind of did the opposite, and the opposite led you to be a little bit more bullish if they beat on one or two metrics, and that's what they did. So 2 more things on Tesla, and then we'll get into SoFi and keep going from there, because SoFi looks like it wants to hit $11 in the pre-market. So 2 quick things. Number one, I thought this was hilarious yesterday. Wall Street Bets made a thesis for why Tesla would crush on earnings. And the thesis was, on the days where Tesla's earnings, Elon doesn't tweet a lot, the stock goes down. The days that Tesla's earnings and Elon tweets a lot, the stock goes up. And so the end of this post said, guess how many times Elon has tweeted so far today? 15 effing times. And so this post went viral on Wall Street Bets, because I would imagine there were some degens that bought calls just based off the thesis that if Elon tweets a lot during the day, Tesla will go up. It kind of makes sense logically, because like if he's in a good mood, he's going to be tweeting. If he knows he's going to have a crappy earnings, then he's not going to be tweeting, because he just like doesn't want to, get into that zone if he knows the earnings are going to suck. So kind of does make sense. And maybe that thesis on Wall Street Bets made people some money yesterday as they bought some calls. Finally, on Tesla, here are the upgrades. Canaccord Genuity raises price target to 278. Piper Sandler raises price target to 310. RBC raises price target to 249. Wedbush continues to be at 300. Goldman Sachs raises price target to 250 from 230. All of the price targets have come out this morning after those earnings. So I think it's not just me, it's not just retail investors, it's the entire street realizing, holy crap, that was a great quarter. And because that was a great quarter, we're likely going to see some more momentum. And that's what we got with Tesla. Okay, let's talk about SoFi. SoFi right now is up 4.7%, 1091. I am going to default to someone who knows SoFi very well and go through a couple of posts that they had around Lending Club, because the reason SoFi is up, again, it seems like because Lending Club, which is another loan provider, is up 16%. And because they're up 16%, that is a massive tailwind for SoFi. So Lending Club on the tailwinds for loan pricing of personal loans. Again, the read across SoFi is extremely positive. This is what Data-Driven Investing posted yesterday. This is from their earnings call. So this is from Lending Club. Obviously, that's coming from really, I'd say, 3 factors. First, the performance we've had on our loans has been very steady, and investors are appreciating that, and they're starting to pay better prices for the consistency and performance. I'd say second, the interest rate environment this last quarter was obviously very helpful. That's very important for SoFi. The 2-year treasury, I think end-to-end dropped 100 basis points. That's obviously conducive to better pricing as well. That's correct. And then that better pricing leads to a mark on the remaining held for sale portfolio that also benefits those fair value marks in the quarter. So it seems like Lending Club not only experienced tailwinds for loan pricing, they experienced tailwinds for actual loan volumes, and they experienced the tailwinds of general rate cuts in the context of how the 2-year treasury bill created more attractive prices for the loans that they were able to give out. So that seems to be a tailwind for all the broader financial companies that are giving out loans. He also says, finally finished the lending call. Every last thing they said is bullish for SoFi. One thing I cannot comprehend after listening to it is how anybody can think a short-long trade on these 2 companies makes any sense whatsoever, meaning short SoFi, long Lending Club. KBW came out with that stance recently, and it seems so strange to me. I do understand how you could believe that one will outperform the other, but to have a buy rating on one and a sell rating on the other is just madness to me. So it seems like Data-Driven Investing, which again is one of the premier analysts when it comes to SoFi, is looking at the Lending Club's earnings call and saying that if SoFi has any level of crossover from the general macro tailwind that LC is facing, now they're up 19% in the pre-markets, then that obviously should be very, very bullish for SoFi. So that seems to be the reason why SoFi is up. There's no press release. There's no big deals or anything. It just seems to be the street pricing in future growth. That future growth being strong for Q4 guidance, which Noto's probably going to reiterate on Tuesday when they have earnings. And if they do that, SoFi calls are going to print. Seems like it's heading to $12, folks. I mean, and if it can get past 12, then that would be very bullish. Like, here's the thing. The difference between now at SoFi, $10 to $11 versus August 2023, when SoFi was $10 to $11, is August 2023 was just like a random pump, not based on rate cuts, not based on the lending environment, not based on macro tailwinds, just based on like the market kind of pumping for a month or two based on a pause on rate hikes That was actually the big tailwind that got the S&P closer to 470. And then, the market had to kind of digest that even if we're pausing interest rates, we're not cutting them. It would take another 18 months just to begin cutting. So it made sense that SoFi would fall down. Now, I don't think anyone expected it to be in purgatory from $6 to $8 for like the next 18 months, but that created a solid base. And if you load it up during that base, it does seem like 2025 is going to be a difference for SoFi in terms of its breakout from that base. And that's obviously pretty bullish for the overall company itself. So there you go. 4% up on SoFi. SoFi and Tesla, when they open up, it's going to be exciting to see kind of what happens. Tesla, 14.3%. SoFi right here, up about 4% on the day. Doug says the hilarious other thing about SoFi is that they get this move on other companies' earnings. SoFi couldn't move their own stock that much with huge triple beats. Yeah, and I think that's, that's something that I've talked about a lot, which is the narrative of this stock isn't conducive to like movement to the upside based on the company's phenomenal earnings, which they've had for the past 5-6 quarters, just based on, I feel like, a communication problem. But it's weird because I say it's a communication problem, and then I haven't listened to the LC earnings call, but is the LC CEO, the London Club CEO, that much better at communication than Noto? Maybe he is. Maybe got to dive into that. But it's like Noto's not a bad communicator. He's just not like an Alex Karp type of communicator. But I don't think you need to be an Alex Karp type of communicator just to get the stock to break out from $7, right? Which it was stuck at for a while after being gap profitable. So it is weird, the kind of narrative associated with this company, but it does look like the broader tailwinds of rate cuts and lending growth is probably going to change that because they're just going to be able to put up the right numbers. And if they can, then that should continue to help SoFi as well. No way, Jubei. No way. Hood now is options trading in the UK. No way. That's not happening. Is that happening? I know they just put out margin. Did they actually bring options? I feel like I would have seen that by now. I feel like you're messing with me. Robinhood, IR. Let's see. That's a big deal, dude. If they announce that today. I don't see it yet. I don't see it. If you have a link, let me know. But I don't see that yet. That would be big though. Options in the I don't see it yet. It's margin investing. Let me know where you found that. I don't see it on the websites. Options trading in the UK is so important because I actually did some research on the UK markets when they brought in margin, and I realized not a lot of brokers give margin in the UK. Like, because already, and I know a lot of you guys in the UK can attest to this, the idea of investing is so taboo, right? Like most people don't invest. So if you're in the UK and you're watching the channel, you're in the very small minority of the population that actually takes a risk with your capital. And most people don't do it. So if most people do it, it's kind of just buy and hold, right? Or put it into a high yield savings account. So options is not that popular. Margin is not that popular, which now makes me realize why it's taken Robinhood so long to bring these features. These are very important features, but they just got regulatory approval for margin on October 21st, which was 3 days ago. So it's not like it's that easy for them to bring this to a country that is not in the culture of investing as much. Now they should go to India, because we talked about India. These mother effers are trading like 30 million contracts a month or something, right? So in India, I think they would have no problem getting the regulatory approval. But it is one of those things that once they expand to the UK, that is going to be something that's important because there's not that many brokers that offer options and margin. Okay, cool. So that's what we got in the context of SoFi. S&P 500 up about 0.5%. Palantir up 1%. We'll talk more about Palantir later, but actually we'll talk about them right now. The partnership is not that deep to get into. I'll make a broader Palantir daily episode. I know I haven't made a Palantir daily episode in like 2 weeks. It's the longest I've ever taken a break from doing the show, but just was not able to do it in India. But here's the partnership itself. Again, Karp will be on CNBC tonight at 4 p.m. and he'll be talking with the L3 Harris CEO. So L3 Harris and Palantir announced strategic partnership. This came out yesterday after hours. The company's complementary capabilities, including L3 Harris's sensors and software-defined systems and Palantir's AIP platform, will together enable new levels of capability and resilient connectivity across the joint all-domain network, ensuring warfighters can make more informed decisions faster to protect our nation's security and that of our allies. So essentially, L3 Harris is saying, hey, we have a ton of hardware that we can use with your software. There's no reason for us to not be using your software, given we're both in the defense space and given that we both have the same values in regards to how to protect the warfighter. It's an obvious partnership that starts to make a lot of sense. Palantir's partnered with a ton of these defense contractors. Anduril is another one that Palantir works with from a software perspective. So it makes sense that they're working together. Another thing from the press release, L3 Harris and Palantir's strategic partnership encompasses a variety of ongoing initiatives, including a collaboration on U.S. Army programs like Titan and efforts aligned with the U.S. Army's unified network strategy, leveraging AIP internally at L3 Harris for enterprise-wide digital transformation initiatives and development and demonstration efforts with sensors, radios, and other advanced technologies. Again, we're seeing AIP and the use cases of it, not just in the commercial sector, not just with healthcare, not just with energy, but also realistically inside of defense and inside of the defense contractors that are building products to be able to sell to the government. So it's just more advancements on AIP, which should lead us to more growth on AIP. And if that leads us to more growth on AIP, we are hopefully looking at a 30% growth quarter, which is going to be massive for Palantir. So that's what we got right now in the context of Palantir. And yeah, that was a big update today. I'll be live on the market close and we'll see what Karp has to say with the L3 Harris CEO and probably go deeper on this. We haven't heard from Karp since AIPCon. It's been a while. And we haven't had a press release in a while. So this was the first press release and we haven't heard from Karp basically in a month and a half. So this will be his first public appearance before earnings. And then we got earnings on November 4th and we'll see what happens there. Okay, cool. Not bad. That's what we got with Palantir. Andrew says it's okay. Admit Palantir is also taking a breather for the last 2 weeks. Yeah, that's true. I mean, Palantir, to be fair, I didn't do daily Palantir, which ironically, as Joe says, calling it daily for the past 2 weeks. But Palantir also hasn't had a ton of news over the past 2 weeks. So it actually makes sense that it kind of chilled out a bit. One thing I forgot to mention at the beginning of the show, I will be having a guest at 11 a.m. join the market open. And that guest is an ex-Palantir employee. And that guest is actually, I think you guys are going to enjoy this one. He's the CEO and founder of, I think, the fastest growing startup in the United States of America. So Kalshi is an app that literally 2 weeks ago got the regulatory approval by the courts in the United States, the U.S. District Appeal Courts, to allow legal betting. So, everyone see those Polymarket polls about Trump and Harris, and Polymarket shows Trump's up 60% versus 40% for Harris. That is not American investors betting. Those are people across the world placing their bets. And I found that out last week ago that's not actually Americans betting, which kind of made me feel a little, well, like, can we really trust that at that point, right? Because if it's not Americans, it's just other people's perspectives. It's not actual Americans putting their money on the line, which would indicate some level of methodology that is better than polls, but it's not Americans. Kalshi lets you do it in America. And so they got approved a couple weeks ago. They are now number 7 on the App Store in finance, and they're number 78 overall. They're like ahead of pretty much every major finance app right now. So the CEO is ex-Palantir, ex-Citadel. He graduated MIT, and he's going to be with me at 11 a.m. talking about how they're building the startup, how they're growing, and also the future of making a marketplace out of anything. If you guys actually go to Kalshi's website, it's really cool because you can bet on anything, not just the election. I mean, take a look at this right now. Let's get to some fun stuff because they have a ton of fun stuff. So let's do Elon Musk. You can bet Tesla Robotaxi public release before 2026. You can make a $100 bet and it would turn into $211 if you're right, a $100 bet and it would turn into $148 if you bet no. Tesla deliveries this quarter. You can bet on that. How many launches will SpaceX have this year? You can bet on that. You can just bet on pretty much everything. Like pretty much everything. You can bet on movies being good or bad, what they do at the box office. Like this is one of the next, in my opinion, big companies because they're essentially building out a marketplace to bet on anything. And if you can bet on something, you can bet on the fact that Americans definitely love taking risks. And just even like $200, $300 bets on random things, it's legal now based on this platform, and you can interact with it. So I think that's actually really cool. They raised like $30 million from Sequoia. Charles Schwab personally invested in the company. So it'll be really fun to see what he has to say and how he's thinking about the election and the overall market betting atmosphere. It is absolutely peak degen. This is like 1000% degen central. But I don't know, dude. I feel like this thing could be bigger than FanDuel. This could be bigger than DraftKings. I was trying to get this guy to let me invest in it, but he has no space in it. I was like, dude, can I please put some money into this? But I don't know, dude. It's just it's one of those things where it's like, if you can bet on anything, I feel like people are going to want to keep betting on anything. And then over the long term, that could turn into a really big marketplace. And they make money by taking a small fee off every bet. Pretty simple business. And so it's just a question of how fast they can scale it. So he'll be on 11 a.m. and we'll talk more and see what he has to say. Chris says, I like this. You can buy and sell contracts. Yeah, literally. I mean, as soon as I discovered the website, I was like, damn, this is like, it makes sense. Like if you were going to bet on a startup, there's all these stupid, shitty AI companies popping up saying, we're going to like change the world with our LLM. It's like, no, dude, I want like an actual idea. And this is one of the most interesting ideas that I've seen in a while. So this is their moment. Startups have certain growth phases, and the growth phase right now is the election, and everyone wants to bet on the election. They're not going to get this moment again where literally all the attention is on how do we get an election betting app that allows us to, bet on a candidate before the election. So I think it's going to be a really interesting interview because, just imagine, I would imagine he doesn't sleep. This is he's probably growing hundreds of thousands of users a day, and they're trying to build a real company out of this. So it's going to be interesting to see kind of how this plays out and what they have to say on that. All right, so that's what we got in regards to Tesla, SoFi, and Palantir. So let's look at some of the other earnings we had this morning, because we did have some other earnings. American Airlines crushed earnings again. It's just going to show that that companies are putting up the numbers and that travel is continuing to be in effect, which is a very, very good thing as well. So you got right here, American Airlines adjusted EPS 30 cents versus 13 cents, revenue 13.6 billion versus 13.5, passenger revenue 12.5 versus 12.3. And then their fiscal year 2024 guidance, they raised adjusted EPS again. A lot of people are talking about recession. I'm looking at companies saying we're raising our EPS, we're raising our revenue. It's just so hard to see currently, not that it can't happen, but it's hard to see a lot of these companies, getting into a negative downtrend when they're raising momentum, when they're raising guidance, and that's continuing their momentum. They raised their adjusted operating margin from 3.5% to 4.5%, and then they raised their adjusted EPS from 70 cents to about $1.35, which is not bad at all. I mean, you're really seeing some strong momentum when it comes to American Airlines. Then you had Northrop Grumman, also decent earnings, up 2% year over year on revenue, slight miss, 10.18 billion versus 10 billion, and then adjusted EPS $7 versus 6.8 cents, up 13% year over year. A lot of the companies that are missing, whether it's Tesla, Northrop, or some of the other ones we saw yesterday, they're missing on revenue. They're not really missing on EPS. And it's exciting to see that because it means they're becoming a bit more efficient. They're increasing their operating margins, and there's something going on in the company that's allowing them to have more money come to the bottom line, even if they don't have more top line sales growth, which theoretically might be AI. I mean, if AI, and I know it's still early, but if AI is giving these companies a little bit more productivity and efficiencies, they should be able to be more efficient, which means they should be able to have more net income, even if they don't have top line revenue growth, which means they're beating on EPS numbers. So it's nice to see the momentum, and it does feel like, again, a lot of companies are continuing to beat earnings, or if they miss, it's a very slight miss that they have as well. UPS also had earnings. That's correct. Where's UPS stock right now? Let's take a look at that. We got the market open in 6 minutes. UPS, wow, holy crap. When did UPS go up 10%? All right, let me pull up the UPS numbers. That is not bad. UPS, so revenues of 22.1 billion versus 21.1 last year. EPS of 180 versus 1.76, and consolidated non-GAAP adjusted operating margins of 8.9%. UPS CEO says, I want to thank all UPSers for their hard work and efforts. After a challenging 18-month period, our company returned to revenue and profitable growth. Peak season is nearly upon us, and we are ready to deliver another successful holiday season and continue the progress we demonstrated in the third quarter. So this means two things. Number one, it means FedEx earnings are a FedEx problem. We saw FedEx tank, I think, like 13% on earnings. That's a FedEx issue. Because if UPS is not tanking 13%, if UPS is putting up their numbers, if they're increasing their operating margins, then that means people are just choosing to order stuff and send stuff with UPS more than FedEx. And that is something that FedEx has to figure out internally. So it did not seem like FedEx was sort of a macro issue for the broader shipping market. Number two, if UPS in Q3 put up these numbers and they're up 10% right now, that means that people bought a lot of stuff in Q3. People sent a lot of stuff in Q3. I think Shopify is green off this. I think just off a hunch, Shopify is green. Yup, Shopify is up 1%. Why? Because a lot of Shopify packages get sent via UPS. So if UPS had more volumes of deliveries, then that means Shopify theoretically sold more products, and merchants on Shopify sold more products. So that's bullish for e-commerce, and that's just bullish for the consumer. If the consumer is ready to buy and sell stuff, and UPS is ready to deliver that stuff, then theoretically that should be lining up for a really good Q3 across the e-commerce sector and across the sort of main brands that handle the consumer. Again, dude, like, I'm not trying to be super, super bullish, but it's hard not to be bullish when you're seeing this stuff. Now, the election is going to be the big thing that either takes away all the bullishness or brings in a lot of bearishness, or maybe it's just flat because we get a split Congress, whether Harris or Trump wins, and it doesn't matter what happens because none of them can pass their policies and the market's kind of in gridlock, and that's okay. But the actual economic data, whether it's CPI, initial jobless claims, we're seeing the CPI come down in Europe. We're seeing, or in the UK at 1.7%, the lowest in 3 years. The ECB lowered rates. Canada lowered rates by 50 basis points. Justin Trudeau came out yesterday and he basically said, hey, inflation is well below our target, which means we're in a good spot to lower rates. I would imagine the Fed's going to raise by or lower by another 25 bips. I mean, you're just seeing a ton of momentum in regards to the macro. And then Q3 earnings are supplying that. Q3 earnings are supplying the growth that the market needs to feel that things are not too bad. Chris says, I just signed up for Kalshi and got a $20 bonus for depositing $250. Okay, cool. Super cool. So yeah, I mean, Kalshi is a really interesting website. It's a really interesting website. I think there's a lot of excitement there. Again, it's really for degens because you're like taking these sort of random bets on anything, but they can pay out really well. And if you're into that ecosystem, then that's not the worst thing. Okay, so we got about 3 minutes going into earnings. What else do we got going on? We got Amazon that got upgraded yesterday or this morning by, I feel like Amazon's just been in such a weird situation. Amazon got upgraded by Bank of America with a 210 price target. Ahead of earnings, we expect a mixed 3Q with retail performance in line and AWS beat, though there may be some pressure on 3P fees. Near-term consensus around street guidance could ease if the outlook doesn't surprise. We also see a potential for retail margin growth to accelerate in the second half of 2025, and the mix shift to consumables normalizes. As a leader in both cloud and U.S. online retail, we view the stock as attractively valued at 28x or lower than street 2026 EPS. The problem, did I say 3 minutes going into earnings? I mean 3 minutes going into the market open. The problem with Amazon is I feel like the street's just like, they know that Bezos is ready to sell as well. Nvdia right here is up 1%. And because they know Bezos is ready to sell, it's one of those things where even if you pump it to 200, if you're going to have a wall of $4 billion of stock sales, you're kind of just like, all right, well, we can't really do anything right now. Amazon has to create really strong operating margins that are above 10.1% because those declined last quarter. And that's why I thought the stock fell. I know a lot of people disagreed with that. I don't think it's about them missing on advertising by $200 million. I think it's about the fact that the retail business is not really producing money. And until it produces money, they know AWS is good, but they need other sectors of the business to ramp up in regards to actual earnings per share. And I think if they increase operating margins back to 10%, where it was 2 quarters ago, then Amazon will get some love. But I think that's the biggest concern going on right now with Amazon, which is Bezos just ready to sell whenever he gets a chance. S&P 500 up about 0.38%. You got Palantir up 0.73%. All eyes on Tesla and SoFi as the market opens. We got about 15 seconds. Tesla up 14.5%. Not bad at all. Let's see if this bad boy can head higher, if it can hold its gains, and if it can maintain its momentum. Ladies and gentlemen, Thursday, October 24th, 9:30 a.m., the stock market once again is open. Wake your ass up. Here we go. Tesla, almost 15% on the day, baby. 245. You're not seeing any red candles. There you go. There you go. You got 15%. Trying to get to 246, 245.70 right now. People are not selling it right here. They are continuing to buy. They like it. It seems like people like it. 14.3%. We'll get back to Tesla in a second. ServiceNow up 5%. They also had a great earnings. This is one of the premier SaaS companies. Not too bad for ServiceNow. Nvdia up another 1%. Vertiv up 1.52%. Shopify up 0.24%. Amazon flat on the day. Lending Club up 17% off those earnings. Let's take a look at SoFi. Oh, wow. SoFi. Let me check the order flow resistance on 11. SoFi at 1096. It looks like it might want 11. Let's see right here. $11 on SoFi has 243,000 shares. So it's going to have a little bit to work through, but given SoFi's volume, 243,000 is not that much. So we're going to have to get some buyers at 11, but if those buyers come in, then SoFi might be able to take out that $11 range. Nvidia right here up about 0.8%. S&P about 0.22% right now. Reddit is up 0.2%. McDonald's up 0.3%. By the way, Starbucks went green yesterday. Starbucks is like not lost anything from the crappy preliminary earnings they came out. I guess the street just really likes the new CEO. They took them down 5%, gave them back that entire 5% plus more yesterday. and now it's green in the pre-markets or as the market opens. So incredible stuff for Starbucks. The market seems to not care too much. SoFi 1095. Where is Tesla? Tesla 243. All right, so Tesla getting a little bit of a red candle right there, but still holding 14% at 243, which is not bad at all for Tesla. Palantir 4282. Again, Palantir, any press release is not really going to get it above, the levels that it's already at, because it's up 150% and it's up like 50% in the past couple months. So at this point, I think it's an earnings story, but the press release we did get from L3 Harris is a big deal. And stock right here up about 0.5% on that news. Chipotle's up about 1%. Hilton's up about 0.10%. Celsius up about 0.5% right now. Costco's up 0.15%. CRM's up 0.45%. CleanSpark's up 3%. Bitcoin, where is Bitcoin? Bitcoin 67,000. Okay, not bad. 67,000, which is, SoFi's 11. Holy crap, I missed it. Wow, look at that, folks. SoFi is now $11. Not bad, folks. Not bad at all. Shout out to Sachin. I know he has a massive position in SoFi. Sachin, if you're free and you want to join the show for like 10 minutes, I would love to get your take on SoFi. I'm sending you the link on Twitter. I know you might not be in a place where you can hop on the show, but even if in audio, I think people would love to get your take on SoFi, given you did bet early on this company during the beginning of the year. So sending you the link on Twitter. If you can join for 10 minutes, would love it. If not, no worries. But there you go. SoFi right here. $11. Those 243,000 shares were eaten up easily, it seems like, as SoFi broke through this $11 range, up 6% on the day, dude. Not bad at all. The news on SoFi is that Lending Club had a phenomenal earnings, and they said they're getting a lot of earnings, or not a lot of earnings, a lot of loan growth. And because they're getting a lot of loan growth, that is a benefit to SoFi right now, as SoFi right here is reacting to the broader macro loan growth that is starting to happen over time. There you go. SoFi 1105. Let's take a look at the spreads that I have on SoFi and see how they are doing. Again, those are 15-20 spreads. Folks, we are up 128% on those. Not too bad. I don't think I take out the initial. I think I leave them there. I mean, it looks like SoFi's headed to $12. If anything, taking them out after Q4 earnings, after we get hopefully a pump to 12, 13, or at least 12, we can normalize 11, maybe get to 11.50, get to 12. That's when I think taking out the initial would be a lot more prudent. Or maybe we let this sucker ride, dude, and SoFi's going to 20. Because if it goes to 20, this 3,500 turns into 50,000, which would be like the biggest trade of my life in terms of percentage return, which would not be bad. So maybe let's see what they say on earnings. Let's see how confident Noto is, if he's really ready to bring the hammer to the shorts. By the way, the shorts are freaking, if you've been short for the past 2 months, it's worked out. But now I don't know if it's easy to be short SoFi. And you got 180 million shorts that are short SoFi. That covering, which maybe we're seeing happen, maybe we're not. If we're not seeing any of it happen, then that's a massive tailwind going into earnings if they blow out on earnings. And we can get a little bit of an epic squeeze, which would be nice. Look at Tesla, up almost 16%, 247. So there you go. Tesla looks like it wants to get to that 250 level. And the question is now, can it get to that 250 level as well? 247. Amazon did go red. Amazon, you got red. SoFi right here is up at 1105, and Tesla 248. See if you can get there. John is 3,500 shares of SoFi. Put in the chat if you own SoFi. Put in the chat if you own SoFi. I asked yesterday how many people own Tesla, and the market closed. We had a decent amount of people own Tesla, but put in the chat if you also own SoFi. IWM, small caps getting some love. QQQ at 491. Enphase at $80. FXI at 3182. China is down on the day. Where is Baba? Baba is, wow. Baba's actually legit below 100, down 1.2%. SoFi just keep running, bro. 1111 on SoFi. Make a wish, folks. 1111 on SoFi. Not bad. Not bad at all, dude. And the cool thing is about SoFi, for all of you guys in the chat saying you own SoFi, you've probably owned SoFi either for the past year and a half or the past, call it 5 months, which means almost everyone is green on SoFi. There is no way I think anyone is legitimately bag holding SoFi, because it's not like SoFi was $15, $17 for a very long time, like Palantir was before it went to $6. SoFi, I know it SPAC'd at 21 or whatever, but then it came down pretty aggressively, and then it stayed down for almost 2.5 years. So pretty much everyone, I think, is green on SoFi if you bought at all before this run. which is not too bad at all. Yeah, we got Nick 2,000 shares of SoFi, Raul 600 shares, Alex 1,000 shares, Redford 10,000 shares, Brian with SoFi Leaps, Fred with 8,000 shares. I don't even want to know how many shares Sachin has. It's probably a lot more than what everyone is thinking. Bsov at 12,500 shares. When Sachin gets in on a position, he goes really in on a position. If you guys don't know Sachin, he's a big friend of the channel. He was there on Palantir Weekly in 2022, and he basically went all in on Palantir at like $15, and then he doubled down at $8. When I mean all in, I mean his entire U.S. portfolio, because he lives in Malaysia, was all in on Palantir. So when he makes a position, he takes a really big bet, and so I would imagine SoFi is doing very well for him, as he took a big bet at around $7-8 on SoFi. Palantir right here, 43.08. So Palantir up about 1%. Peloton was up 11% yesterday because David Einhorn says it's an incredibly undervalued stock. It's down 1.4% right now, but Peloton year to date, I think it's up like 200%. Peloton stock is, no, sorry, it's up 6% year to date. Okay, so from the lows, it's up 200% because it bottomed at around, no, it's up 100%. It bottomed at $3 in April, but year to date, it's only up 6%. I don't know if that many people are going to buy Peloton because of David Einhorn. I know he's an influential guy, but $2 billion market cap, I think they're an attractive buyout candidate. The question is just who's going to buy them out. I've always said it should be Apple. Apple's probably not going to do that. But you got Peloton up about 11% yesterday. Nvidia's up about 1.2%. SoFi still up 7% on the day. Shopify up a little bit. UPS up 8%. Meta up about 0.5%. Tesla up 16%. So now Tesla's going for $250. It's at $249.19. It's up $35 today, dude. Oh my gosh. Let me check the put or the calls. The calls should be up a lot, bro, on Tesla. Like the calls on Tesla, if you bought a 230 strike expiring tomorrow on Friday, which there were 22,000 of those open, you are up 230 expiring tomorrow, 640%. That is the beauty of the leverage in derivatives. It's just beautiful. It's just beautiful to see it happen. Now, it obviously goes to the downside also. If you bet big and the stock goes the other direction, you could be down a lot. But it's really fun sometimes to see it. Look, at 245 call, there is 13,000 of those open. Those are up 900%, which means if you bet that Tesla would go from 213 to 245 by October 25th, you're up 10x your money. It's so exciting. It's so exciting. Again, it's dangerous because you could get addicted to it and then your bets go the wrong way and you lose a lot of money. Lending Club up 22%, but it is cool sometimes to see how that plays out. Fritz says they are. I bought a bunch. All right, congrats to Fritz. Those 230 calls are printing up 7x on the day for you right now. Enphase is up. Where's Enphase? Enphase getting a little bit of love. So Enphase fell 14% yesterday, bottomed out around that $79, $80 range, up about 2% right now. UPS again up 8%. Meta's up about 0.5%. And again, Lending Club is what's leading. Wow, SoFi 11.15. Look at that, dude. Pretty incredible. Lending Club up 20% now. So you're starting to see a pretty sizable move just on SoFi based on that. Now we just got to get through the election, dude. We just got to get through the election. We get through the election, get some decent CPI data. Unemployment stays fine. And I think we can get some momentum. Spartacus says, I bought November 22nd, 250 calls. They're up 3x right now. Congrats. That's incredible. TSLL is up 2x of Tesla, which means TSLL is up 33%. If you sold puts on TSLL yesterday, that is also a decent strategy. Those puts should be printing for you. And you're getting that momentum. SoFi is up for those that are asking because of Lending Club. Lending Club had a really strong earnings, and on their earnings call, they said that loan growth is taking off like a rocket ship. They didn't literally say that, but that's essentially what they said. And that's why other companies that give out loans, like SoFi, are catching a tailwind from Lending Club, up about 24% right now. So that is why SoFi is getting this momentum. Where is Rocket Lab? Rocket Lab is up 3% as well, 1132. The entire market's doing, this is the thing about the market, dude. We had one red day yesterday. It was so funny because I got to show you guys this tweet. Even I on Twitter, I was like, well, now we got some red folks. And then our good old friend Chad was like, thanks for the great analysis of it. It was good. But that really was the analysis yesterday. It was red. S&P was down 1%. It was red. And people weren't freaking out, but people were kind of just like, oh, well, we haven't had a red day in a while. It was kind of expected. But we finally saw some red yesterday. You had chat say thanks for the deep analysis. And I said, look, I control the traffic lights. That's my job. Red, green, red, green. But even after a negative down 1% day on the S&P, which we haven't had in about 2 weeks or about 4 weeks, you get a rebound immediately. Like the resiliency of this market is not to be messed with, dude. It's really not to be messed with. And I go back in July and August and try to think, if you went super bearish on the market, what would be your logic? And the only logic I feel like could have been Rocket Lab 1147, now it's up 5%, could have been this idea that you think unemployment will rocket up. And that just didn't happen. If that was the thesis for why a recession, or the 10-year and the 2-year would uninvert and yada, yada, and you were using all these kind of historical factors, which aren't bad things to look at. It's just the real story comes through Q3 earnings, no matter what. And if companies put up crappy earnings, yeah, we're probably going to have a crappy economy, crappy stock market. If they put up good earnings, we're going to have a decent market. And in 2025, it's going to be a question if companies can put up the numbers that they put up against 2024, because those comps are going to be much harder. But at least to end out 2024, it looks like these companies are going to put up decent numbers. And, that's why the end of 2024, as long as the election goes well, might not be the worst thing in the world. Why is Rocket Lab going up? I don't know. Let's do a quick search on Rocket Lab. Let's see if we have anything. Oh, KeyBlank raised their price target on Rocket Lab to $12 from $11. It looks like that's what's moving on it. Yeah, that's the big news. KeyBlank raised their target to $12 from $11. It looks like that's one of the important analysts. Sometimes, even if the move on a stock is not big, like 11 to 12 in terms of the upgrade, if the analysts themselves are very important, which I don't know all the Rocket Lab analysts, but if KeyBlank is one of like the main analysts and they say something, that's when a stock could also move higher, because people just respect that analyst a lot more. So that might be one of the reasons why we're seeing some momentum. Do you think Palantir will hit 44 today? No, not really. I think it's on earnings now. I really think it's on earnings. I mean, if it gets to 44, I wouldn't mind. That would be nice. But I think every time it gets to, like, it's teasing us right now, trying to think it's going to get to 43.50. And then right when it gets to 43.50, 43.60, it just comes right back down. That's what's happened for the past week and a half. Maybe today is different, but I think now it's going to be a question of earnings. That is going to determine pretty much everything when it comes to Palantir here. Where's PayPal? PayPal at 82. Okay, PayPal, you got 82. Where's SoFi at 11.12. Where's Tesla 248. Tesla at 248 right now, getting some momentum. Rivian has been interesting. Whenever it touches 10, it pops up 4 or 5%. Where's Rivian? Yeah, Rivian. Wow, I think that's the Tesla tailwind on Rivian. Is Lucid up as well? Yeah, Lucid's up 1%. The thing is, when Elon said they're going to have delivery growth of 20 to 30%, theoretically, I could understand people saying, okay, well, if Tesla's going to grow that many vehicles, then we should buy Rivian because that means people are buying EVs again. That might not be the best logic, though, because Tesla might grow vehicle deliveries, but, Rivian might not, right? People might just pick Teslas over Rivian. So it's something I could see algorithmically all the EV stocks getting a bid, but I don't know if that's going to be realistic in regards to that type of growth hitting the other EVs if it hits Tesla. Enphase up 2%. Baba's still down 1%. Bitcoin trying to make a run to 68,000. Let's go to the crypto stocks. We didn't even check Robinhood today. Where's Robinhood? Robinhood 27.13, up 1.6%. So Robinhood up a little bit on the day. I did buy another 100 shares of Robinhood yesterday, guys, at like 26.50. I bought more. I think earnings are going to be good, and look, I think it's in a decent situation going into the end of the year. So I did buy 100 shares yesterday. Crypto stocks. So Bitfarms is up 2%. MicroStrategy. Wow. MicroStrategy hitting 52-week highs and all-time highs, I think. 225. Holy crap, dude. It's so funny because MicroStrategy was 200 when Bitcoin was 73,000 back in March. And then Bitcoin fell dramatically and MicroStrategy fell dramatically. But now, based on all the idiosyncratic ways the net asset value premium stuff works with MicroStrategy, MicroStrategy is higher than it was in March, even though Bitcoin is still $7,000 below where it was at the peak, which is kind of crazy. I mean, what that means is MicroStrategy is trading at pretty absurd premiums against their Bitcoin exposure, but it also means I think people are front running the Bitcoin run by loading up on MicroStrategy, and that's why MicroStrategy is getting some momentum right here. Marathon's up about 3%. Riot's up about 3%. CleanSpark's up about 4%. Coinbase is up 4.5%. Robinhood up 1.3%. And then BitX, the 2x leverage Bitcoin fund, is up 4% on the day as well. Amid their Bitcoin per share went up. Okay, that makes sense. They did buy more Bitcoin. That's true. Since then, I think Saylor has bought like 2 billion Bitcoin or 1.5 billion Bitcoin since March. So that's true. They do have more Bitcoin, which makes sense, but they still trade at a pretty big premium. ServiceNow is up 6%. ServiceNow had a great earnings. They had a really good earnings. They had the opposite of IBM. IBM had not the best earnings, which is IBM's down 6%. I don't know how IBM's doing $15 billion of revenue a quarter. Like, I guess I haven't looked into them, but they're such a legacy company, but they still have such a big business. I mean, 15 billion a quarter is pretty incredible. But they were lacking on a couple of key metrics, including their margins, which is why they're down 6%. ServiceNow is the opposite. ServiceNow is really embracing AI. They talked more about the AI tailwind. And if ServiceNow is up 6% and they're getting a bit of an AI bid, you can imagine that's going to be bullish for Palantir as well. Look at SoFi, 1119. Wow, she's running, folks. She is running. Lending Club up 19%. Rocket Lab up 7%. Palantir up 2% on the day. Enphase up 2%. Baba still down. Bitcoin trying to get to 68. Amazon turns green. Shopify down a little bit. Starbucks is almost at $100. Apple is down. Apple came out with a report, or not Apple, but an analyst came out with a report yesterday that said Apple's going to lose 10 million phones in terms of projections for Q4 of 2024. And that tanked the stock about 2% yesterday, down at about another 1%. So I think we need to hear some of the analysts talk about where this super cycle is going to come from, because I don't think we have the best information on that right now. But Apple is reacting a bit negative towards that news. Nvdia up about 1/3%, Vertiv up 1.3%, and the S&P 500 up about 0.15% on the day. Tesla's at 250. Are we there? Holy crap, Tesla 17%. Goodness gracious, bro. Goodness gracious. I mean, dude, it's not bad. You got to give it up to Tesla here. They had a pretty damn quarter. A pretty damn good quarter. Which is not bad at all. Look at that, 249. They broke through 250, up 16.9%. And then SoFi right here touches 1120. An 1120 close on SoFi today would be huge. But a 1150 close would be even bigger and a lot better, especially because it would be breaking that August 2023 high. But if we can even get an $11 close, I think that would be the best thing for SoFi. If Lending Club keeps its momentum, then maybe SoFi keeps its momentum as well. Tesla now has MAGA FOMO. Oh my gosh. I mean, look, dude, if Trump gets in, Elon and Trump are buddy. That is bullish for Tesla. So it's one of those things where maybe the market's front running a Trump victory as well. But I don't know, dude. You look at any poll, they say Trump's up and they say Kamala's up. So I don't think I still don't think we know what's going to happen with the election. But on these earnings alone, the gross margin story was exceptional. And that is why Tesla is getting a bid. And they deserve it. They absolutely deserve it. That was one of the best quarters I've seen ever when it comes for Tesla. And the numbers really justify that. It's important to see Tesla continuing to do what they need to do. Let's hear from Gene Munster, talk a little bit about Tesla and get his take on it, and see where he thinks the stock could be potentially going as well.
And talking about that did have a benefit, a one-time benefit of some of the Cybertruck FSD recognition. We'll hear on the call how much that impacted. So I suspect that there's going to be some dial back on that. Either way, it still likely will have beaten where the street was expecting for the margin number.
What's your number one question going into this call?
Number one question is what this new vehicle looks like, and ultimately, is it just like a adjustment to Model 3? That's what I'm going to be focused in. Are they going to give any color? The reason they didn't talk about that at the We Robot event, they don't want to show an image of a new vehicle coming and slow existing sales. So it makes sense that they held it to this forum and hope to get some context in terms of what that vehicle actually looks like.
Should we assume that this is basically, it uses the same sort of chassis or parts as a Model 3, so as not to have to, create a whole new line in a factory or mold entirely whole parts?
That's generally where consensus is at now, is that they're going to have to use the existing. They don't want to, as you said, kind of spin up Giga Mexico. That's probably not going to happen. That would be the case if they were making progress on Giga Mexico, which they're not, for kind of a smaller two-seater. So I think it's optimistic to think we're going to see that Initially, I thought maybe because they're building some of them for the Cyber Cab, but I think that investors should probably put their head around a stripped down Model 3 here to get to this. I like what Dan said. They're not going to hit the $25,000. It's probably going to be 30, but keep in mind, this is the part that blows me away and that I think investors should be contemplating here. They've cut their costs by 6% year over year on doing EVs. They're making money on EVs. Other car companies are retreating. They're doing that with some of these lower cost vehicles. ASPs are down 6%. What this all means is they're doing all the right things to prepare for the future, to build electric cars. And I think this is still a major problem for traditional auto. How are they going to solve this when they're not investing in production of EVs?
It's a hell of a point. And Tesla on that earnings said that they had their lowest cost of goods per car ever in their history at $35,100, which is a pretty remarkable feat given the diversity of cars they make and all the macroeconomic headwinds they had, all the supply chain issues they had in the beginning of the year. And still, I mean, remember there was the factory in Germany, someone tried to burn it down. Some like activist who felt like Tesla was, ruining the world or whatever. And there was an arson attack and you had a couple of days of delay. Like a couple of days of delay is a big deal when you only have 90 days in a quarter and you have to put up numbers. So even through all of that this year, they have been able to do what they need to do, which is just incredible. Tesla 249. Where is SoFi? Wow, 1120. So SoFi up 11.63%. SoFi did hit 1130 a couple minutes ago. Now SoFi up 7.63%. I don't think this run is fake, folks. I think the run in August 2023 was fake. And I know it was fake because I was up a lot of money on SoFi options and all of it went away in about 2 weeks, and it was very sad to see that. But that run was a run that was based on nothing, and unfortunately, I didn't have the insight to realize that was a run based on nothing. This is why, I have a little bit of beef with this Peter Lynch quote that I keep seeing people put on Twitter. I cannot stand this quote. This quote is like, if you spend more than 10 minutes on economics, you've wasted like 10 minutes of your life. I could not disagree more with that quote. And look, Peter Lynch, one of the greatest investing minds of our lifetime. But that quote is the stupidest quote I've ever heard in my life. I don't care what anyone thinks of that. The idea that you shouldn't spend more than 10 minutes to understand the macro, which can help you figure out, hey, does it make sense to invest in SoFi in August 2023 when there's no rate cuts? Which means you need to understand the macroeconomic dynamics of interest rates and rate cuts and what it means on lending to then figure out, is SoFi a good company or not? Like, of course you need to understand the economy. Of course you need to understand the macro. This idea that, just invest in good companies and that'll be fine. It's like, no. There's certain things called valuation and entry points. And if you invested in SoFi because it was a good company at $20 in the zero interest rate environment that we had in 2021, that would have been a horrible entry price on SoFi because the economy could not hold up, aka the macro tailwinds could not be a tailwind to SoFi's business. So the idea that we don't need to learn about economics, but we only need to focus on fundamentals, I think is just stupid. Like when I had to figure out if is that really a Peter Lynch quote? Because I was like, how can someone so smart say something so dumb? I legitimately think that's the dumbest thing ever. We don't need to focus on the economy. We only need to focus on the fundamentals of a stock. It's like, no, we absolutely need to focus on the economy. So, and even if you say, if you're long-term SoFi, it doesn't matter. Yeah, but entry price matters, right? If you're long-term SoFi and you get in, or any stock, you get in at 30 and then it falls to 6, it needs to 5x just for you to break even. So it's like, it's not that easy of just saying, you're long-term, focus on the fundamentals. Like you need to figure out when to get in and get out. And I think the macro definitely matters that. So I did have a bit of a beef with that quote and I had to get that off my chest. But SoFi at 1121, the reason I don't think this thing is fake is because now the macro seems to be conducive to SoFi's run. And it looks like that, should not necessarily go down the drain as long as we get more rate cuts as well. All right, so that's what we got in the context of SoFi. What else do we got going on? Where's MicroStrategy? Is MicroStrategy up right now? MicroStrategy, wow, 227. There you go, 52-week high for MicroStrategy, 227, 228 now. Robinhood 2707, SoFi 1120, Palantir still pushing 43.35, not letting go. And given the entire market's green, Palantir's green. Rocket Lab almost $12, 1178 right now on Rocket Lab. Vince is eating good today. Because Vince has a good old 65,000 shares of this bad boy at like $4. So we know Vince is happy right now. Starbucks at 98, Bitcoin 68,000, trying to get back there right close to 68,000. Shopify at 80, Amazon at 185, Meta 566, and Tesla at 249. We got some breaking news, folks. We have Mukesh Ambani, who's the richest man in India, having a little talk with Jensen Huang in India discussing AI. Here we go.
And Jensen, where I see our partnership, and is really, in a sense, I was waiting for your GB200s to mature, because like you, from first principles, I don't like doing anything but the best technology. And now your GB200, right, is undoubtedly the best technology. And
Mukesh,
I'm looking forward.
all of my technology is the best technology.
Yo, Jensen is an OG, bro. I love it. This is incredible. I think you're going to get a lot of indie investors start buying up Nvidia after seeing this conference today.
India,
Including the next one.
India will start with what is the absolute best that you have. And I'm happy to, like, what we are doing at Jamnagar is we are now ready for big scale up. So we're building infrastructure, right? And we think big. So we're building infrastructure for 1 gigawatt, which can be expandable to multiple gigawatts at one location. We already have the green power so that we are not dependent on anybody else for power. We are building this so that we can scale this, and as your multiple order of magnitude technologies come, we will build our infrastructure, and we will. One important piece that I believe is important is that for India and Indians, right, we have to repeat a geo for intelligence to be really affordable, available to the common people.
Yeah.
And
There you go. Look, Jensen's making the rounds across the world. He is looking to other places to expand. India, one of the biggest markets. We've talked about that for the past couple of weeks. Obviously, it makes sense for Nvidia to sell their AI chips and technology into India. Reliance, Mukesh Ambani, one of the richest people in the country, one of the biggest companies in India. It seems like if Jensen can get a lot of these Indian companies to embrace a digital transformation based on AI, that would mean more GPUs. The thing about India, and this is what my uncle was telling me, is they don't produce tech companies. They do a lot of tech consulting, like IT services, but they don't actually produce tech companies. And so one of the reasons America's stock market is so phenomenal, and we talked about this yesterday, S&P 500 right here at 579, is the PE ratio of the S&P is able to expand because tech companies like a Palantir that get into the S&P that are small at 100 billion right now compared to the long term where they could get to one day, might be 400 or 500 billion, maybe $1 trillion company. Those Palantir will likely have 80% gross margins for the lifetime of their company based on the nature of the business. Amazon, Meta, Microsoft, Google, these companies have amazing gross margins. They can expand their multiples because they have so much free cash flow, which means they can then buy back their stock. They can print net income. They can give money back to shareholders. All of that commands a premium on the stock market. And so when you've got companies like Palantir entering into the S&P 500, and you've got the top 10 companies being pretty much all tech companies outside of Eli Lilly and a few others that are more pharmaceutical, you've just got a growing stock market that is based on so much momentum via expansion growth. India doesn't have that. And if India could digitally transform and embrace AI and make their current companies more efficient and productive, that should theoretically increase the price to earnings ratio of the broader Indian indices. And so it seems like they're ready to embrace Jensen. It seems like they're ready to embrace that AI strategization and digital transformation. And it seems like Jensen is going to have another big market to sell into. So the Nvidia demand story doesn't seem like it's slowing down anytime soon. And that's why you're seeing Nvidia stock hit all-time highs. Nvidia right now at 140. So we're up about 0.5%. Where's Robinhood? 27.17. SoFi 11.24. Let me check the resistance on 11.50 for SoFi. You've got 57,000 shares. And then for $12, you've got 166,000 shares. Again, it's not a lot given how many people buy SoFi on every uptick on the cents. I mean, you got 40,000 shares trading hands from 11.23 to 11.24. So if it gets the momentum, yeah, it seems like the buying pressure has a chance to overtake that. Palantir 4360. Okay. So Palantir's running, I also think because everything's running. I mean, what's red right now? IBM is red. Alibaba's red. Apple's red. So we know why Baba's red. We know why Apple's red. We know why IBM's red. Eli Lilly, they had some news yesterday. Maybe that's why they're red. Boeing had some news about a satellite blowing up. That's also why they're red. They also didn't have the best earnings. Outside of that, everything else is pretty much green. I did buy some more silver yesterday as well. Silver had a dip about 3-4%. I bought some silver yesterday. So silver's green, gold is green, Lockheed Martin's up, Celsius is up. Pretty much everything fell yesterday as the market showed some weakness. And today you're kind of seeing the reverse. And Tesla seems to be leading the way. Tesla right here, 249, up 16% right now on the day. Coca-Cola, Pepsi, cruise lines, China, all red. Interesting. Interesting that the cruise lines are red because the airlines had some good earnings. Even Southwest had good earnings. Let's see if their stock is up. They are down 4%, and American Airlines is down 0.12%. So weird because those two companies had decent earnings. Maybe they ran up a little bit going into earnings, so they're taking some profits. But maybe the cruise lines are reacting. Carnival is up slightly right now to some of the airlines that we saw. Coca-Cola is down, so that means Berkshire Hathaway maybe is down. Berkshire Hathaway, yeah, is down. By the way, Warren Buffett came out with a quote yesterday on, well, he didn't come up with a quote, but Berkshire Hathaway posted this on their website. And the quote was, I quote, "In light of the increased usage of social media, there have been numerous fraudulent claims regarding Mr. Buffett's endorsement of investment products as well as his endorsement of support of political candidates. Mr. Buffett does not currently and will not prospectively endorse investment products or endorse and support any political candidates." So it seems like Berkshire Hathaway felt that the potential news that was circulating, the fake news that was circulating around Buffett's investment or political endorsements was getting so large that they had to come out and literally say he's not supporting anyone. I don't know if Buffett has supported people in the past. From my understanding, Buffett has traditionally been more Democratic, if I'm not wrong. I don't know if he actually picked a candidate over the past few election cycles. Maybe he stayed out of it. And if he did, then it makes sense that he's staying out of this one as well. Basically, he's saying he doesn't want any beef. He doesn't want to say anything. He just wants to make money. He wants to take his profits, and he wants to hold on to his cash. That is pretty much the vibe we're getting from Mr. Warren Buffett. Is Rocket Lab at 12? Are we at 12 on Rocket Lab? Holy crap. Rocket Lab up 10%. Goodness gracious, dude. What a market today, man. Rocket Lab's up 12%. Up 10%. Nvidia's up 1%. Palantir's up 2.3%. MicroStrategy's up 7%. Bitcoin's not even moving that much for MicroStrategy to get up 7%. Bitcoin's kind of, it's up 1%, but it's not like it's breaking 68. SoFi up 7%. Robinhood up 2%. ServiceNow up 7%, and then you got Tesla leading the way up 16% on the day. ASTS is pumping. Maybe that's helping Rocket Lab as well. ASTS, yeah, that one's up 13%. There you go. That might be catching a little bit of a bid for Rocket Lab right here. Not bad. Not bad at all. Google's red. Yo, Google's been such an interesting situation, dude. We talked about that Perplexity news yesterday of them getting $9 billion in terms of their AI valuation. When you get $9 billion, it seems like the market is starting to shift away from traditional business models and begin to value other companies as the future. And I'm not saying Perplexity is going to beat Google, but if they are the future or companies like them are the future, it does beg the question, why would you invest in Google? However, I think Google's going to come out on earnings and they're going to shut everybody up because they're going to put up some monster numbers and just be like, yeah, you guys need to stop messing with us. We're Big Daddy Google. But if they don't, then I think we're going to get a little bit of pain for Google because there's already a pretty bad narrative that exists with them right now. Speaking of AI startups getting momentum, let's listen to one of the premier venture capitalists in Silicon Valley and see what he has to say about the funding landscape around valuations, AI, and where technology is currently going right now.
Morning, venture capital firm General Catalyst announcing it has now raised $8 billion in new capital, includes $4.5 billion for General Catalyst core VC funds focused on seed and growth equity. Joining us right now in an exclusive interview is Herman Taneja. He is the CEO and managing partner at General Catalyst. The firm has backed now some of the biggest names, Snap, Stripe, and so many others. Congratulations.
Thanks for having me.
What is this? I mean, one of the big questions about what's happening right now is you guys have raised a lot of money. A lot of venture firms are raising money. The question is, where's the opportunity today?
Yeah.
And where's the opportunity on the harvesting side on the other end? Because it appears right now there's a lot of companies that have remained private.
Yeah. So, and we think of ourselves as a global investment and transformation company. So if you think about what's happening in the world today, you have this whole idea that every country is trying to be more resilient in key industries after the pandemic and the wars and the energy crises. It's, in AI, in defense and energy, industrials, healthcare. So there's massive transformation in these industries happening. And then you've got the whole applied AI movement of how we're going to sort of leverage that technology in these markets. So from an opportunity perspective, these are actually really, really big ideas. So you need the capital base to build companies that can be part of the transformation there. On the other side, I think from a liquidity standpoint, there is a lot of work that the industry has to do. There's two reasons for that. One is you've got companies like Stripe and SpaceX that have decided they want to compound in the private markets.
Right.
And I think they have good reasons for it, at least for now. On the other side, you have a bunch of companies that'll get to like 100, 200 million in revenue. They're growing nicely, but they're not venture darlings. And I don't think they're fit for being public market candidates either. So what happens to those businesses? So I think that's where the industry has to mature and think about, in my opinion, new capital solutions to be able to get these companies to get to
What do you think
scale.
that looks like? And I ask because some people would argue this is actually a tough fundraising environment right now because there haven't been enough exits on the other end. So some of the U.S. pension funds and others are stretched because they're not getting the capital back to give back to others.
Yeah, look, this is a tough fundraise because we have to get liquidity around a lot of the companies that have been built over the last several years. But at the same time, the opportunity is massive. So the way we think about it is, at the core of who we are, working with the most ambitious founders as early as possible. So seed and creation are the core. And there, you probably saw, we combined with the firm La Familia in Europe and Venture Highway in India. So we can actually do this globally, given that's our mandate, and also help create companies that aren't naturally going to self-combust in the ecosystem. So that's the core.
Right.
And then the question is, how do you actually apply these to drive these industry transformations that are happening in the market today?
How much bigger are the checks going to be now? I mean, you talked about AI, and one of the things that's clearly now happening is a competitive advantage is literally capital.
Absolutely. So I think there are two things happening. One is seeding companies. We start with small checks like we already always have. But if these companies are on the path to be enduring businesses, they can take a lot of capital, and we want to be there for them for the long term. On the other side, I think applied AI is very interesting. Because one of the earliest opportunities in applied AI is everywhere in the last 30 years.
Explain to the audience what you mean by applied AI.
Yeah. So there's a lot of infrastructure being developed around foundation models. You hear about OpenAI, you hear about Anthropic, Mistral, which we're investors in, and others. Then the question is, what are you going to do with these models, and where do you build businesses that use AI, which, in our opinion, largely is a workforce transformation play. So
that is Palantir, dude. When he says largely it's a workforce transformation play, that to me is Palantir. Again, a lot of startups are going to try to tackle that challenge as well. But if it's about workforce transformation, it feels like Palantir is already the premier company selling that type of software, which is why I think Palantir is getting a $95 billion valuation right now.
The biggest opportunity today, and we're very focused on this, is everywhere there was offshoring with labor arbitrage over the last 30 years, you're going to onshore with AI productivity. So think about businesses like call centers, revenue cycle management,
Right.
in healthcare, legal services, accounting services.
You think that all that stuff that's offshore now gets pulled back here, for example?
I think it's going to get pulled back here with AI-first companies. And we're building a lot of those. And the results are fantastic. These AI models are already good enough to be able to capture that value and build highly, highly valuable companies that are high margin, and I think will be appreciated by the public markets.
What do you think of these large language models, the frontier models themselves? Do you think they will have a huge amount of value? Or do you think it's the applied piece of it?
I think these models they all start to get commoditized over time. And if you think about, one of those companies launches a model, the next one launches a tenth the cost sort of a few months later, and they start to have parity. That's good for the market, by the way. You want this stuff to be commoditized. The companies that are building these models, the ones I think that'll capture long-term value are the ones that build the tooling, because the adoption of these models in the enterprise is not as trivial as we think, because you need to modernize data infrastructure. You need to adapt these models to those specific industries. Then you need to have change management, because you have agentic AI and human workforces now working differently in these companies.
Again, everything he just described about agentic workforces with humans in the loop, models being adapted to industries, and then the securitization of those models in a way that's confidential enough for the enterprises to accept them. All of that just screams Palantir to me. So the reason that's interesting to listen to in terms of a VC who just raised $8 billion to invest in AI talk about this is the largest opportunity that he's seeing, and he has $8 billion ready to deploy against these opportunities, is, in his words, workforce transformation with AI. Again, dude, there are 3 areas of AI. That's it. Robotics, FSD, and work and enterprise. That's it. I mean, to me, it's FSD is the one of the biggest ones because that changes the world. If we don't have to drive cars anymore, then you got robotics, which encompasses a lot of things in regards to logistics, deliveries, but also humanoid robotics. I think is part of that. And then you've got enterprises. And then the tiniest part of those 3 things, you can put it in the corner, is LLMs for personal use cases like, hey, ChatGPT, show me how to do blah, blah, blah. That is the least of the largest use cases, and it's not going to make the most amount of money. So if you got FSD robotics, which is pretty much all Tesla, in my opinion, you got Nvdia benefiting from all of that, and then you've got enterprise AI solutions, which there's hundreds of thousands of enterprises across the world that believe they can get better if they have some type of digital transformation with AI, and they all need to be adapted to in their own personal needs. Palantir is not going to win that entire market, but if Palantir even wins a certain percentage of it, you could argue 10, 20% of it, yeah, I could see them becoming that $1 trillion company. And I think that's why the street's giving them that $95 billion market cap. This is the thing that I see Arnie in the chat. Arnie and I go back and forth with a lot of people on Twitter that are like so obsessed about the valuation, they cannot handle it. And look, I am not speaking as someone who has forgotten about the value of valuation, because I know what it felt like to invest in Palantir when it was very overvalued in 2021 and then get to the depths of 2022 and I'm sitting on a ton of losses. However, when the narrative changes around an entire emerging industry, Tesla right here up 17%, and Palantir seems to be the sort of gateway to every element of what that industry is talking about when it comes to workforce transformation, then it's just a question of if they can execute. But if they can execute, the street's definitely going to give them the premium, because the street is going to front run whatever company they can find that can match the overall macro thesis. And then it's just, can Palantir actually execute and give the growth? And if they can, then I think they're going to keep commanding the premium that they have right now. So there you go. 43.62 on Palantir, up about 2.43% of the day. Everything that VC said pretty much seems to match up to Palantir. But even outside of Palantir, if they're going to continue investing in enterprise AI solutions, that should be a broader tailwind to a lot of these SaaS companies. Maybe a broader tailwind for Salesforce as well, which is at 288, up from 212 on the lows. And you should see a lot of SaaS companies hopefully catch a little bit of a bid from AI being a tailwind. Lending Club's up 19%, Enphase up 2.4%, Robinhood 27.21. Someone says, Amit, do you think Robinhood's undervalued? Yes, I still do. Robinhood's market cap is 24 billion with 5 billion in cash, so their enterprise value is 19 billion, growing at 40%. I think closer to 35 by January, February is kind of my new target. Does it have to get there? No. Could it fall another 10% from here? Sure. If Bitcoin fell to 50,000, would Robinhood get hit badly? Yes. But if the macro kind of holds up the way I think it can, then I think Robinhood has some more upside from here at 27.18. So we'll have earnings for them next week, and we'll see kind of how they do. We also have a ton of company earnings next week. Google, Amazon, Meta, also SoFi next week on Tuesday. So going to be a big week going into the election to see how these companies put up their numbers. Let's get into new home sales. We got some of that breaking news right now and see what we're looking at for that.
Stocks are coming back a little after that tech-led sell-off yesterday. The S&P
Yesterday's highs, new home sales for September better than expected at 738,000 seasonally adjusted annualized units. And that, well, it puts it very close to the highest levels just since July, when we were slightly over 750,000. What is interesting here is last month was downgraded from 716 to 709,000, which makes it, of course, the weakest level going back to June. Now, what's important here is, remember, this is September data. Mid-September, we saw the Fed cut 50. We saw a little bit of optimism with rates. It didn't last long. We know that following these data points, rates have gone up. Most likely new home sales going to take a bit of a ding next time we look at it, especially considering interest rate movements that are associated with lending on 30-year fix. For more color on new home sales, let's go to Diana Olick. Diana?
Well, Rick, I want to dig deeper into the mortgage numbers that you were just alluding to. The 30-year fix started September at 6.4% and then dropped really sharply to 6.11 in the first couple of weeks of the month. But then in the anticipation of that Fed cut, they started to move higher. So you have this kind of mixed months of rates.
So rates are up at 6.92, but we did beat. We had 738,000 versus 720. So we did have a beat on new home sales, which is bullish, but mortgage rates still are, way too high right now.
coming down at the beginning, and expectation for buyers that they're going to come down even further, and then them shooting back the other direction unexpectedly. Now, remember, this number on new home sales is based on signed contracts. So it's people out shopping during the month of September, and their expectation, again, is that they're going to be looking at lower rates. That may be part of the bump. On existing homes, we're also seeing reports from Redfin that they saw pending home sales coming up in September as well. Now, I want to note price. The price was basically flat, up just 0.05% to $426,300. That's a median price of a new home sold in September. The builders, though, they've said, Pulte reported this week, their margins were difficult, they said, because they had to offer more incentives. So those are the incentives that are cutting into builder margins, but again, keeping that cost down, homes more affordable to get more buyers in the door. Sarah?
Okay, Diana, thank you very much for the deep dive on housing. As mentioned, stocks are stabilizing a little bit here after that big drop, more than 1.5% for the NASDAQ, fueled by worries about higher rates, maybe election angst, some earnings misses or corrections. Jobless claims today, again, come in benign. The 4-week moving average of jobless claims is now 238,000 for the week. That was up from the previous average of 236. But, claims are still low, and they're not suggesting any kind of deterioration in the job market or layoffs across the board. It's also, they might have even been lower if we didn't have the hurricane impact. We've had 4 big hurricanes since August, which is maybe distorted. But if you're looking for a
That's a good point. Initial jobless claims were lower than expected, and if we didn't have the hurricane, they might have been even lower, which means, again, the market's just thinking that people have jobs and they have the money to spend.
signal of pain in the labor market or increasing weakness, you're just not really seeing that in the week-to-week layoff numbers reflected in the initial jobless claims. What are we getting from the Beige Book? We know this is important. It's the anecdotal data that comes from all the different districts around the Fed. And I think maybe it had played a role in the last rate cut, which was 50 basis points, because it has been more pessimistic and downbeat than some of the other macro data. And what we got from the Beige Book this time is a lot of election impact, David.
I've read it now, yes.
More than 10, I think almost 15 references to election uncertainty. I just picked some for you. Here's from Boston. Contacts saw risk to the overall business climate from uncertainty surrounding, what else? The presidential election. In New York, many contacts reported hesitancy in decision-making due to heightened uncertainty surrounding a presidential election. In Richmond, a textile manufacturer expected tepid demand because customers were buying cautiously until the new year due to usual nervous period ahead of elections. And even in Cleveland, several contacts also noted that some producers were holding off on orders because of uncertainty related to the coming presidential
To be fair
election.
to the original argument, it did come from Pepsi saying people were holding off on purchasing snacks, to which I had some questions. And then we had Ed Bastian, kind of alone amongst the airline CEOs, also discussing it. But fair point. It's clearly impacting certain people's and certain companies' plans.
Right. And what was notable is that this was widespread across the U.S. and across different industries, according to the Beige Book. What I would say overall is that economic activity was flat in Beige Book. So it didn't show the pickup that we necessarily see in the macro data that's been pushing yields higher and getting people more optimistic. I think Q3 growth next week is going to be a big number. As far as the commentary from companies, what they're seeing in the economy, pretty mixed. Listen to the UPS CEO.
In the third quarter, we faced a macro environment that was slightly worse than we expected. In the U.S., online sales slowed, and manufacturing activity was lower than we anticipated. This slowdown in manufacturing activity was also true outside of the U.S., as we continue to see lower industrial production weigh on volume in certain geographies.
So we know the manufacturing sector of the economy has been weaker. We saw that in FedEx results. We see that in UPS results. You just heard it from Carol Tomei. Harley-Davidson also being affected by all this. The CEO says we've worked diligently through the quarter to mitigate the impact of high interest rates, macroeconomic and political uncertainty. So they're not buying Harleys either because they're worried about the election, David, that continue to put pressure on our industry and customers, especially in our core markets.
That is interesting that some of these CEOs are saying that the election uncertainty is the reason why they're not selling as much as they were before. I mean, I guess you can say it's somewhat of a reasonable argument, but it might also be a little bit of a scapegoat right now to justify some of the underperformance. All right, so not too bad. So home sales, again, we talked about this yesterday. Mortgage rates do need to come down. They won't come down until rates come down. Rates won't come down until the Fed feels that CPI is headed in the right direction. It seems like that part of the challenge is already solved. However, that 10-year, let's see where that's at today. That needs to come down as well for the Fed to get more excited to lower rates. 10 years at 4.2, so it's down a little bit on the day. I still think we get 25 bips, and I think that 25 bips hopefully gets the 10-year to come down, and that will help with mortgage rates coming down. Now, the fact that new home sales were up against expectations actually is pretty bullish. It means that people did have the fervor to say, hey, we're going to buy a new house in the month of September. But obviously the numbers compared year over year are just not that good. And that's because mortgage rates need to come down a lot more. Rocket Lab's up 9.5%. Yes, Rocket Lab is up. I don't know what's happening to Rocket Lab. They did get upgraded to $12, but outside of that news, ASTS did have some news as well. Maybe they're feeding off a little bit of that news. So both of those have been pretty good for Rocket Lab. Rocket Lab at one point this year was $3. So if it gets to, or like $3.50 or something. So if it gets to $12, you're going to get a nice return off Rocket Lab, more than 3x. Just a question of getting to those levels. Palantir holding 43.60, which is not bad, up 2.3%. Tesla's still up 16% on the day. So kind of not going above 250, not getting below 245, kind of staying in that 248 range, which is nice. Where is SoFi? We do have to survive the 1030 slam, folks. We have that coming up. SoFi 1113 up 7%. That 1030 slam could be brutal. So hopefully once we're past that, then we can move forward and things can get a little bit more exciting. What do you think about Coinbase? I don't like Coinbase. Not saying that it can't run, but I think Coinbase has already run a ton from $30 in February of 2023. It's up, almost 7x. So Coinbase is just not that interesting to me as a company. Like they've already had their major run. So if you're buying in now, you're kind of getting in after the company is 7x from the lows. B, it's highly contingent on retail trading volumes for Bitcoin, which has not been that good, right, for the past 7 months. And so unlike Robinhood, where there's other parts of their business that are able to pick up the slack if Bitcoin does bad, Coinbase has nothing other than Bitcoin that needs to do well. And if Bitcoin doesn't do well, Solana is not going to do well. Ethereum is not going to do well. Well, a lot of the meme coins, Coinbase doesn't even have. Like you have to go to a third-party wallet to be able to trade those meme coins because Coinbase isn't allowed to list them. So to me, it's not exciting unless Bitcoin does well. So if you buy Coinbase, it's really, I mean, I'd rather buy MicroStrategy if I'm purely buying it for Bitcoin exposure, just because I think there's more alpha there versus Coinbase. But if you're holding Coinbase for the next 10 years and you think, crypto exchanges are going to matter because Bitcoin and other cryptocurrencies are going to gain momentum, then yeah, I think as a 10-year play, it's not something that's necessarily going to do horrible compared to the other ones. Altcoin season is happening, but a lot of those altcoins are not on Coinbase, dude. Like some of the most important altcoins that I've seen on the Solana network, they're not on Coinbase, so you can't buy them there. And so just like Robinhood, dude, Robinhood is missing out on so much revenue because we haven't listed Solana on the platform because the SEC forced them to take it down. Coinbase does have Solana, but they don't have all the meme coins that are primarily built on the Solana network. Pretty much all the meme coins that are like relevant are built on Solana, and a lot of them are not on Coinbase, which is the problem. American Airlines goes green. Nvdia slightly red from where it was before, but still green on the day at 139. Hood at 27.12. Rivian 1065. Grinder holding the 13s. You got Grinder up 1.44%. They were down about 4% yesterday. Celsius up about 1.28%. CleanSpark up about 4% on the day. That company drug that was up 2,000% last week, that is up another 10% today as well. And you got CrowdStrike as well at 303. CrowdStrike. Again, that one fell to about 192. It's made its way back now at $303. Still down from like 350 at the top that it had this year. Lilium's going broke. What do you think about Archer and Joby? Yeah, so I was actually looking into Lilium's financials the other day because a friend texted me about them and I was looking at them deeper. Wow, they're down 50% today. What did they announce today? This is the sad thing. Lilium is such an interesting company. When I researched them a couple years ago, they're like really exciting, but sometimes as a public company, it just doesn't work, and you need to stay private for longer because you just can't put up the numbers that are going to get shareholders to be impressed. So, yeah, I think Joby, Archer, Lilium, all these companies are exciting. I do think you have to have a pretty long time horizon to want to invest in eVTOLs. I don't think it's happening overnight, but I think a lot of them could be the future of transportation. It's just one of those things where there's so many other opportunities in the market that I don't know if you want to sit on that capital. But I'm curious, why is Lilium down 50%? That is Lilium confirms its German subsidiary will file for insolvency under a self-administrative process due to the lack of funding. Okay, so one part of Lilium is going bankrupt, basically. And that's why the stock is down 50%. Palantir used to own Lilium. They don't own it anymore. But yeah, Lilium just not able to survive as a public company, at least for not right now. Gene says the 10:30 a.m. slam you reference is due to new hourly candle openings up, which either reconfirm continuation or reversal of market open at 9:30. New hourly candle starts at 10:30. Okay, that's fair. I thought it was Jane Street algos, just like messing with everybody. Your argument, Gene, makes a lot more sense, to be honest. But yeah, regardless, 10:30, we seem to get a little bit of pain every single day. I do believe at 11 a.m. we still will be having the Kalshi co-founder on the show today. So at 11 a.m. we'll get to talk to him, get his thoughts on what's going on in the investing election markets, and see kind of what his take has been on how the election is playing out from a betting perspective. And we'll see what he has to say. All right, we got some analysts on Tesla, and they have some things to say. We got RBC. Let's get his thoughts on this Tesla Q3 earnings.
Because it'll be the first data point in October.
OpEx, energy gen was stronger, but look, it was a 12-cent beat versus consensus. 7 came from full self-driving release, which is really an accrual for prior deliveries, prior services they gave on software. So I really think that should be considered one time in nature. And most of the rest was actually stronger EV credits. I'll give them credit. The COGS were very, very good, but for my concern has been the price cuts and volume. And year-to-date volume's down 2%, and pricing was down 3% in the quarter, and it's down 5% versus Q4. So the core auto business, I think, still is in struggle, but they did a good job on costs. I'll give them credit.
And you're not a believer in Musk's predictions for next year in terms of the increase in sales?
I am not. I think if you look at the lower price model is probably going to cannibalize some of Model 3 and Y. Also realize we're seeing demand there, as I just kind of highlighted. Demand is sinking on those models, even with the price cuts. So I think demand is going to definitely not fall short of the 20 to 30%. I actually think there's a risk volumes could be down next year. So yeah, I don't believe in it. I also think we have to focus on about margins, right? So a lower price model, it's going to be hard to make that profitably. And it's also going to be hard to slot that in because you're already getting something like $3,000 to $5,000 in financing promos on vehicles like the Model 3. Doesn't leave a lot of cushion to lower the price of the Model 2.5 or whatever people are calling on this lower price version.
Tom, I would assume you have a different view, and obviously an important point here is that margins did come in well above what many had been anticipating, including, I believe, yourself.
Yeah, I actually agree with a lot of what Colin said, believe it or not. The 17.1% gross margin ex credit was a strong beat. I do think if you take out those FSD deferred revenue piece, you still come out with a very strong gross profit margin ex credit. And that comes with all those price cutting. So exactly that is why we actually think that the automotive performance was actually pretty healthy. They were able to do it with substantial price cutting. Look at the other OEMs, the legacy OEMs, what's been happening to their margins with price cutting. And I actually think the setup for next year on growth, I agree with Colin. It's not going to be 20, 30% that maybe Elon is saying, but we have a 13% growth rate, which is actually where consensus is. There is growth rate, and if they can do it with the margin strength that they have, now folks can stop thinking about the automotive piece and margins and start looking at what really should drive the stock, right? Which is non-automotive things, energy storage, autonomy, potentially Optimus. But now I think it's more of the distraction that was this automotive piece. Now folks can turn their attention to things that actually drive the stock price and the market capitalization to where it is.
Well, Colin, is there election risk around Tesla stock? Is that part of the thesis at all?
Well, one, I think, just on the last points, I mean, I think the stocks are forward looking. And so can the level of cost performance continue? They cut price about $1,500. Can they really take another $1,500 sequentially? I don't think so. So I think as we go into Q4, not only do you have the FSD coming down, but you're probably going to still have some of that pricing pressure continues. So I think forward looking, I think we're going to still see the auto business under pressure. I also would take a different view on the robotaxi view. We just had that robotaxi event. There's still challenges. They really aren't addressing some of the issues there. Can they actually do this with vision only? Will the economics work? Will they get regulatory approval? Realize that robotaxi event was done in a Hollywood studio.
This guy's puts did not print this morning. This guy's puts did not print this morning.
Because the vehicles aren't yet approved to actually be tested on public roads yet. So there's a lot of challenges ahead. So I would actually take the counter on the robotaxi side. I actually think, you know, you look at companies like Waymo, they're actually doing a lot better.
What about the election? His involvement?
On the election, I think there is definitely a risk here for Tesla. I think they get tons of IRA credits. I think if Trump wins, those are likely going to go away, and a lot of that tailwind goes away. So I actually think, despite Elon's support for Trump, I think it's actually quite a big risk for Tesla as a company.
Interesting. Tom, let's get to you for sort of the last words here. I mean, what did they do then to improve margins so much? I mean, was it simply cutting costs in a very effective way?
Yeah, I think it's definitely cost control. We also know there were some logistics issues, some freight that was going on, but some of this stuff is not necessarily unsustainable. And I just note, like, regulatory credits is not something that you should X out forever. They're actually going to get more regulatory credits next year. In terms of just a quick comment on the IRA, I don't think Trump can just make that go away. That's pretty much law. It's also the battery production is in a lot of red states. So I think that's here to stay. It should benefit them, especially producing batteries. And I would just note really quickly on robotaxis, this is more of a tectonic thing that a rising tide lifts all boats. It's more about this will happen in the future. My valuation only has them reaching 9% share of it. It's still a substantial profit center from them. And it's really evidence is we can see what FSD has done on the roads. Only time will tell if that will really work longer term. But this isn't something that's going to happen next year, the year after. This is decades away. We just think they'll be an important player in this market.
Well, while you guys have been talking, the stock's up even more, 16.5%. I mean, very quickly, Tom, is that justified? Is that move you're looking at right there justified on these numbers?
I actually think it is, right? The stock sold off like 10.5% after Robotaxi Day. I know that was underwhelming, but it was such a sharp pullback. So we get that gain back up because a lot of folks thought that, oh, this car business isn't really a car business. It's just backed on subsidies and regulatory credits. Now we're seeing it's not. So a huge bear thesis has kind of been removed. I'm not surprised at all.
Okay. Guys, appreciate it. Thank you, Colin and Tom.
As we head to break, here's our roadmap for the rest of the hour. ServiceNow riding the AI boom with its latest earnings beat. And
all of the bear cases that guy talked about, I mean, they felt like idiosyncratic concerns. Wow, Rocket Lab above 12. Look at that. Where's SoFi? 11.12. SoFi getting rejected at 11.20, but still maintaining 11. All of those concerns are like legit concerns. They're not like wrong concerns to have. It's just, this was one of those quarters where it looks like Tesla's headed in the right direction. And I guess his biggest concern was that he doesn't believe Elon on the 20 to 30% deliveries growth, which, I mean, you either agree or don't agree, right? And that kind of forms your thesis. But if we assume it's correct, then I don't know how you can be that bearish. I guess one argument he made is that the profitability of that $25,000 car is going to be into question. Look, that's a fair point. You could say like a lot of Honda Civics and Toyota Corollas don't make money on the actual cars. However, if FSD ramps up, which it looks like it's getting to the point where if Robotaxi is ready in the next 2 years, then FSD is ramping up. A lot of that margin might be able to be made on FSD. Now, is everyone going to buy FSD when they buy a $25,000 car? No, but you only need a certain percentage of them to subsidize the rest of the people that don't buy it. And as the program ramps up and maybe Tesla, instead of doing $100 a month, they say, hey, try it for $20 a month, right? Just to get people into the door and see what it feels like. Like the trajectory seems to be positive. And I think a lot of the bearish parts that he highlighted, they made sense a couple of days ago. After these earnings, given the margin growth and given the cost of goods coming down to their lowest level ever, it's hard to see those bear cases be relevant today. Maybe they'll be relevant if Elon doesn't execute against what he said yesterday in 6-7 months. But at least today, it's not going to be enough to get the stock to be, or for investors to be that scared of buying the stock. which is why you got Tesla here at 249. Matt, can I call you on WhatsApp? And can you give us your thoughts on Rocket Lab and let us know why it's pumping right now? Are you working from home today? Or are you in the bathroom at work watching my stream because you love me so much? And you're you're taking your lunch break. Is it lunchtime yet? 10:30? Do you guys eat lunch at 10:30? Or when do you guys eat lunch? When is a real lunch break for most of you guys? I feel like my lunch break is after the show. So usually my lunch break is at like 11:30 or 12 or whatever. Sure, let me get to a conference room. Okay, perfect. So Matt, I'm just going to send you a link then, and you can just join through audio if not video. But if you can join on video, then that'll be dope as well. Okay, cool. So we'll have Matt on talking about Rocket Lab and what's going on with Rocket Lab as well. Lunch is at 11 for anyone who ever worked blue collar. I start work at 8 a.m. Lunch break at 8:15. That's funny. 1 p.m., 2 p.m. Norwegians eat at 11, 12:01 on the dot every day. All right, so what do you guys do during lunch break then? Do you watch a YouTube video? Is that what lunch break consists of? Do you like talk to your coworkers? Or how do you, because my lunch break is pretty lonely. I'm just at home and I'm just like probably watching a YouTube video while I'm at home and eat it for 30 minutes and then you get back to work. But that's usually how mine ends up. Okay, cool. So Tesla 249. We got Palantir still holding 43.50. SoFi 11.17. Let's take a look at those SoFi options again and see where they're at. We are at 85 cents. I paid 35 cents. So we're up $5,000. We're up 142% on the spreads. Again, not really feeling compelled to take out my initial. I feel like we let this sucker ride. I mean, $20 by 2026 kind of feels like a lot to ask for. But then again, when you're breaking out of a base as violent or as long as it was for $6 to $8, the breakout should be violent. And I don't know, maybe on earnings, we know 2025 is going to be bullish for SoFi no matter what, given this lending club earnings. So if we know it's going to be bullish across the board, it's going to be hard to see 2025 being so bad that it requires, trimming. Unless they start saying something goes wrong with the tech side of the business or whatever. So there's obviously bear cases to it, but if it has a breakout, and most people think the fair value right now is closer to $18, if you just value it as a normal business outside of just price to book value, then maybe you get some momentum. Bayray says paper hands. Bayray, didn't you sell your Oxy calls before earnings? Talking about paper hands. Goodness gracious. But you're right. I am being a little paper handed here. Probably gotta hold it until after earnings. Okay, cool. Folks, we got the man, the myth, the legend, the guy who is the cult leader of the company that has gone up 3x since he made the call. He came on my channel, I think 5 months ago, and told everyone to just shut up and buy this shit. And he didn't really say that, but he basically said that. And it's done pretty well, ladies and gentlemen. All the way from work, Mr. Matt Money. What's up?
Yeah, sorry, it's not my typical setup. How are things?
Things are very good, sir. How are you?
Can you hear me?
Yeah, we can hear you.
Good. Yeah, it's a little bit of a delay. I think it's my fault.
Little delay. Okay. Yeah. I like how your name is.
Let me hop on Wi-Fi really quick.
Yeah. Or if it sucks, you can just keep the camera off if the video sucks. But if not, then you should be good. I love how Matt says founder of Riz. Of course he does. Founder of Riz. You bought Enphase call for earnings, Bayray? I didn't know that. I mean, paper handing those would have been a good idea. Paper handing those would have not been a bad idea. Bayray likes to gamble, dude. Bayray had a little fun in the stock market this year. He's up God knows how much on Palantir, and so now he's getting into the options gambling world. Yeah. Matt, I think when he gets on Wi-Fi, we'll see if his video works. If not, then we'll just do audio because that's not the best. 98% drop. Well, it is what it is. I've stopped gambling on earnings, dude, because like you just never know what's gonna happen, and it's one of those things where it's like, but it literally is a lotto ticket. So it's one of those things where it's like you got to be so happy to lose the money if you are, because like you don't need the money. But then if it goes up, it's like up 3, 4, 5x, and then it's just fun to see it play out. Tesla 250 now. Okay, let's get to Tesla as we wait for Matt. Tesla, SoFi still 1120, Rocket Lab 1190, down a little bit. Tesla 250 up 17% right here. Holding on to that 250 level. William says, I took out positions on Hood and Elf yesterday thinking about Celsius. So speaking of Bay Ray, he is very bullish on Celsius. Chris went long Celsius the other day. Jason, friend of the channel, is excited about Celsius. I don't like it too much, but I do think that it's probably bottomed for the year. And as long as they have a decent earnings surprise, then Celsius should not be in a horrible situation. All right, you're back. Can you hear us? You cannot hear us at all. Isn't it funny when someone can't hear you? Matt, can you hear me? Matt, Rocket Lab just fell to $7. No, he can't hear us. All right. I think I'm just gonna call Matt, dude. That's much easier than this. It's easy. Let me just call him. It'll be much simpler than doing it the other way. Okay, let's give him a call. This should be easier. Matt's pile of cash is blocking all the signals. Exactly. Yeah, Matt. I think the phone will be better here.
The reception from Turks and Caicos isn't that great.
The reception from the moon is not that good. I didn't know that.
Yeah, exactly.
All right, so I want to ask you a couple questions. The first thing I want to start off with, though, is obviously Rocket Lab hitting 52-week highs, $12. Why is it happening? And kind of, do you think this thing is just headed to the moon? Literally, I mean, like, how are you thinking of Rocket Lab right now?
I mean, I think it's a continuation of the thesis that I established a couple months back. I mean, I've been a shareholder since 2021 timeframe, and it's really just been a de-risking over time as to where these guys are headed. They've launched 53 rockets into space. They've been able to establish the fact that they can create great space systems, whether it's satellite buses or solar components that NASA can use for different satellite systems, whatever. And they've continued to establish themselves as the future competitor for SpaceX when it comes to the Falcon 9 rocket. And so I think every quarter, every launch, every milestone that they hit gets them closer and closer towards the next step, And if you think about where SpaceX is a $200 billion organization, and Rocket Lab's a $5 billion organization. If you're going to be direct competitors, and there's no other competitors in the space, well, some of that, not to say that SpaceX is going to slow down, but some of that future growth that SpaceX was probably anticipating on getting will probably be siphoned off into Rocket Lab once they get a successful Neutron launch. And so, we're less than 9 months away, and these guys launched the first time back in 2017 timeframe with the Electron rocket. They had a very successful first launch. So what's going to be any different with this rocket other than it's going to be slightly bigger? And they also have 53 launches of other rockets under their belt, right? There was predecessors to the Electron as well, but Electron is probably, the most notable that Rocket Lab has. So if you think about it in that perspective, these guys know what they're doing when it comes to launch, and this will unlock a new avenue. And to put it in perspective, why is this a big deal? Well, it lives slightly less than the Falcon 9, but the Falcon 9 is also at a $75 million price point. And the Neutron will be closer maybe to a 50 or 60 million. So somebody might not necessarily have an additional 15 million or so to launch on Falcon 9. And there's other people, I like Elon. I'm a fan of Elon. Elon's been the person that's been pioneering this private space race, in my opinion. But for some reason, some people don't like him, whether it's Bezos, whether it's other folks in the industry that want a secondary player. Having a duopoly has historically been something great in the American economy. AT&T, Verizon, or Exxon, Chevron, however you want to go down the list. Generally speaking, an industry always gets dwindled down to 2 or 3 big players. And I have a very strong feeling that those 2 players will be Rocket Lab and SpaceX. And so why not own both if you can only own one? because one of them's public and the other one's still private, then might as well just own at least one of them.
So in your opinion, this move that we're seeing was bound to happen as the company kind of proved to the market that they are the kind of second premier choice underneath SpaceX that's a bit cheaper than SpaceX right now. And just from a valuation perspective, if you're looking at it from investors, $2-3 billion when you were talking about it versus SpaceX at $200 billion, kind of a no-brainer if you want to get bullish on space. There's obviously risks associated with it, but to have some space exposure, Rocket Lab seems to be the best thing that's out there.
Yeah, and I mean, you're in a historically bankruptable industry, right? Which is why I think, a couple months back it was rated at $2-3 billion. Now I think people are starting to see the writing on the wall of, ASTS has been something that I think is providing more exposure. AST Space Mobile. People are starting to see the potential contract values that are coming. Rocket Lab has their own constellation that they're working on. Will it be as big as ASTS is or Starlink? Who knows? But it is something that they're working on themselves. And so I think people are starting to recognize that these guys aren't just providing launch. These guys aren't just providing satellites. They're providing end-to-end space capability. And I think that is what the true differentiator is. So very comparable to what SpaceX is doing. The nice thing about ASTS, while it brings awareness to Rocket Lab, they don't have their own launch capability. So they're reliant upon people like the Falcon 9, SpaceX rocket, or Rocket Lab to get them there. And so while they have these beautiful contracts, those contracts are dependent upon people like Rocket Lab or SpaceX. So, if you think about it in that perspective, Rocket Lab has all the capability to do what ASTS is doing, but ASTS doesn't have the capability of what Rocket Lab is doing. So that's a whole nother component that I think a lot of people forget. But in terms of why we went from 2 to 6, I think it was always back to what I talked about, over several years. It's going to be a de-risking, right? And I told people, do I think it's going to 0? No, but could it stay here at $2-3 billion forever? Of course it could. It could have, right? It still might go back down. You never know how volatile some of these things get. Do I think it's going to go there? No, but it could. There's always that potential, whether it's some sort of black swan event or what have you. But people were always worried about the run rates. Were they able to get the Neutron off the ground? Now that I think that we're within 9 months and basically have everything set up for the Neutron rocket for June, July of next year launch, it's pretty much everything but wet dress rehearsal, right? You have hot fire of the engine, you have all the tanks ready, you're ready to go in that respect. So I think people are starting to recognize, like, oh crap, right? Like the writing's on the wall. We should probably get our money, because once it's actually launched, I could easily see the stock going to 20. Do I think it's going to go there forever? I think that there's going to be a little bit of hype associated with it, a lot of visibility. And then I think there's going to be some sell-off. But I think by the end of the year, next year, if we get the June, July launch in 2025, I could easily see a place where, at a minimum, we're at $15. And that's a minimum by year end. When I say minimum, it's because there's still other catalysts that we have yet to hear about. There's future Space Development Agency contracts. And for those people that don't necessarily know or are aware of those, there's literally thousands of satellites that the Space Development Agency is trying to put up to have a communications layer, defense layer, the whole space race, Star Wars sort of thing. It's a reality, whether or not people want to believe it. As a what's the word I'm looking for? As a follow-on to what Trump did, which was start the Space Force. People were making fun of it. In reality, this is what's panning out: is the SDA contracts and the need to put some of the satellites into space to make sure that we maintain our own security. As things continue to get more aggressive, we see China, India all having the capability now to get into space with rather ease. So anyway, back to the RL. Who knows where the next thing is, right? Neutron is just the next big leg up, but they're talking about their own constellation, so would they be in competition with Starlink or ASTS from that perspective? Who knows? They're talking about buying on more bolt-on acquisitions. They have $550 million in cash. There's a lot of historic $50 to $150 million companies that, with the right operatorship, can grow into billion-dollar companies on their own, which is what Rocket Lab has been phenomenal at doing over the past 3 to 4 years. They integrated the Solero business. They integrated the ASI business. They integrated a lot of different businesses, and Adam Spice, who's their CFO, has done a phenomenal job at integration. And one of the key things, so I'm going to plug myself, so don't cut out my stream here.
I already got your YouTube link right here, so make sure everyone
there you
follows
go.
YouTube. There you go.
Appreciate that. So we've had Adam and Peter, who's the CFO, Sir Peter Beck, on the channel, and we're in talks with not yet, but within next couple cycles, hopefully of quarters, we'll be able to get Frank, who's our new CFO. COO, Chief Operating Officer, who just came over from Rivian. And before that, he worked at Mercedes Daimler, and he has basically a COO mindset of streamlining things. So while a lot of this has been done by Sir Peter Beck, who's a phenomenal engineer, you do still need people with that manufacturing experience to make sure you get out as many opportunities as possible, to make sure, from a satellite perspective, from a launch perspective, there's small things that industrial engineers or people that do manufacturing can really help with, to help eliminate waste, to make sure that you get to the profitability piece. So I think that they've realized they're at a place right now where they're able to deliver 15 to 20 launches a year. They're going to start the Neutron. That's going to eventually be on a cadence of 15 or 20 a year within the next 5 years, I feel like. So there's a lot of potential upside with this organization, to the point where my base case for the company is easily a 5x from here, $25 billion market cap. And my thought process is once these guys get going, they're going to have the ability to buy back stock in the next 5 to 10 years. And even with that, they're going to be able to continue to increase cadence and do the next leg up of things. And they're going to continue to be relied upon as the number 2 in the United States, as they already are. They're the number 2 most launched vehicle in the U.S. behind the Falcon 9. And I have anticipation that they'll eventually be the number 2 and number 3 launched, right? Where Neutron will eventually be the number 2 behind Falcon 9, and then Electron will probably be the number 3 behind the Neutron rocket. So you think about it, that's literally building yourself into a growing industry. And I'm very bullish, $25 billion market cap base case, upside. I could easily see this getting to $100 billion plus, but I don't have a line of sight to that yet. That's just an inkling, but to people that might think that I'm crazy, I also thought that Palantir would be a $250 to $500 billion base case. I think when you and I chatted, many moons ago, when I was still in my old apartment, it was probably a year and a half, 2 years ago, Mr. Amit. I said that, and people probably were laughing, like, these guys are idiots. Well, it's $100 billion now. Who's laughing with Palantir?
Yep.
And I also said that I think it could get to $1 trillion market cap. And I think people are starting to open their eyes to that.
Yeah, I don't think you're crazy also, because if SpaceX IPO is close to 500 to 750 billion, which seems inevitable, if ASTS is giving Rocket Lab a bit of a bid, I can only imagine, when SpaceX IPOs, what that means for the company as well. So a 5x from here doesn't sound crazy.
I'm gonna get back to it, man, but I'm happy you made it home safe from India. And it's always good to hear your voice, and you're definitely people missed you, man. So congratulations on the continued success, and I appreciate you always reaching out to hear my thoughts, because I can be a little bit of a gabbler,
I love it. Thank you, Matt. Matt's YouTube there in the chat. Please make sure to subscribe to his YouTube channel. He goes live pretty much every day, so you guys can get more of his thesis as he goes live. And I'll talk to you on Palantir Weekly soon.
You rock, brother. I'll talk to you soon.
Talk later. All right, folks. Cool stuff. Just off Matt alone, I think his understanding of Rocket Lab is very, very deep. And there's a lot more videos he has on his channel. But if you're looking for an analyst that actually understands the company, it seems like Matt really, really knows what he's talking about here. And I do think if SpaceX goes public, if SpaceX gets another valuation boost from 200 billion to 400 billion, whatever it is, you're going to see derivative companies start to get some momentum like Rocket Lab just based off that alone. I mean, that TAM is just growing in an exciting way. You got the space TAM growing, you got the AI TAM growing, you got the broader technology atmosphere having more excitement in terms of the Qs, Amazon, Meta, Google just going long on that. It seems like this could be a really exciting decade for growth in technology, as long as we avoid a recession. And there'll probably be some rolling recessions here and there, but as long as we avoid something catastrophic, which could happen, but also given the macro data we're seeing, it looks like it's a little less likely towards the end of the year. Then, we might end out the year in a decent way. Salesforce right here at 286, Palantir at 43.17. You got American Airlines that's up 1.4% of the day. They had a great earnings. It makes sense for them to be up $13 right now. Robinhood 27.10, Rivian 10.37, Lucid 2.50, PayPal 81.51, Enphase $80.96, Coinbase 2.05, SoFi 11.14, still holding that $11 range for SoFi. And then you got Tesla breaking that 250 range, up about 17%. We talked about Jim Cramer on Mad Money yesterday. He called Palantir a cold stock, and he said retail investors can take it much higher. Which, I mean, look, that's possibly true, but I think in terms of Cramer's thoughts, he doesn't believe Palantir is like a real stock because he thinks it's hyped up by retail. I can understand that perspective. I disagree with it. I think the numbers are reaccelerating and the industry that it's in is growing, and so that TAM just gets larger and larger and larger. So I think on earnings, if we live up to the promise that this TAM is growing and that Palantir is a key player in that TAM, then we can hold this multiple, if not expand. And then I think, the Kramers of the world are going to have to realize it's not a joke. This is not just retail pumping it. I mean, it's kind of funny that he says it's retail pumping it when literally S&P 500 inclusion happened a month ago. And most of the buying, I do not think has been from retail. I think a lot of the selling actually has been from retail. Most of the buying has been from institutions who had to buy it from $35 to $38. So it is ironic that he mentions retail when in reality, I think it's way more institutional than retail at all. Martin says any S&P 500 company is no longer driven by retail. Yeah. And there can still be a significant retail ownership in terms of the stock. But if you're in the S&P 500, you're with the big boys, bro. And the big boys don't like losing. And if they think they're going to lose, they'll dump you really quick. But if they think that you're going to win, they're going to buy you up faster than you can imagine. Because at the end of the day, they have a mandate with a lot of these funds to be able to make money for their clients. Another thing about the S&P 500, Robinhood is a candidate next year. They're already 4 quarters of GAAP profitability. They have the liquidity, they have the volume, and I think there's like 2 other requirements that they fulfilled as well in regards to the amount of shares available. So next year, if they can continue executing, there is a shot that they get into the S&P 500, which would also be a really, really big deal for them. So, just the very nature of being in the S&P seems like it's positive for Palantir and denies a little bit more of this whole retail cult sentiment around it. All right. So in about 2 minutes, we are going to have the Kalshi founder join the show, and it'll be fun to get his thoughts on what's going on in regards to the election betting market. Again, this is the website for those that don't know what it is. You can trade on real world events. It is ranked number 70 in the United States App Store right now. Their election polls are showing 58% Trump to win, 42% Harris to win. And this is all American investors, not foreign investors. So that's the court case that they got resolved a couple weeks ago, which is why they're able to do this. And $59 million have been traded within the presidential election betting markets on this platform. And I believe Kalshi thinks they can get closer to 100 million. So they got about 2 weeks left until this election plays out. And we're going to kind of see what it goes through. And then you got all these other polls, right? Who will win the Pennsylvania election? You got 53% Trump, 47% Harris, Nevada, Arizona. You've got all these different smaller polls that you can bet on, or smaller bets you can make that kind of act like polls, even though they're not polls, but gives a totally different spin to how we think about the broader election market as well. Amit, I have a bet already on BTC. Okay, I love it. There you go. I found Kalshi back in 2022. Yeah, they've been around for a while. It's just now they're really picking up steam because the election is like a big tailwind for them. But they have been around for a while. Doug says, what's to stop Trump or whoever from bidding up the odds just to get themselves a positive story? I mean, that's a good question. I'll ask Tarek when he joins the show. That's a fair question. You could argue that some of these candidates, I feel like there's some legal stuff against that. That would be, or I don't know. It's if they got caught doing that, that probably wouldn't be the best PR. So maybe that alone can stop them from doing that. But yeah, you can make an argument that maybe any of these candidates can hire a PR team to then just make these bets independently, and that could bid up the price. But it doesn't seem like that's the type of marketplace that's being developed here, even though that possibly could be a concern for how this is playing out. I really don't think this acts like a poll. Yeah, it doesn't act like a poll, because again, a poll is, hey, who are you voting for? We're going to take the amalgamation of all of these votes, and then we're going to make a statistical analysis based on the votes for yes, the votes for no, the votes for Trump, the vote for Harris. This is a betting market. The only reason, and this is a question I'll ask him as well, I like the betting market methodology because when you've got money on the line, people are more likely to put money on someone they think is actually going to win. And so that is not exactly who you're going to vote for, but that is kind of a derivative of how you think of the landscape when it comes to voting. And so it does seem like there is an argument there for why that could be a decent methodology, even if it's not the perfect methodology. It's definitely a different methodology. And a lot of these marketplaces are getting a lot more attention and momentum based on this new methodology as well. But again, it's not perfect. It's definitely not perfect. And a lot of polls aren't perfect either. Okay, let's see what we have going on in the markets and kind of where these stocks are going. So Palantir 4306, kind of stuck at that 43 range. Google now turning green. Berkshire still red on the day. Berkshire's down 1%. All right, so value stocks taking a bit of a hit. Coca-Cola's down 1%. 1030 Slam was not that crazy. Now we're in 11 a.m. So 1030 Slam was okay, but kind of got through it. SoFi at 1110. SoFi still holding 11. HIMS is up 1.6% today. They were down 7% yesterday off that FDA, off that Novo Nordisk lawsuit with the FDA to ban bootleg Ozempics. So they were down 7% yesterday, but up a little bit on that today. Silver's up kind of flat on the day, 0.05%. Celsius is up 2%. Costco down about 0.5%. CleanSpark up 3%. Where is Hood? Hood is 2711. Hood is up 1.52% right now as well. Gawk says Amit likes the betting markets because his guy is leading. Okay, so let's do this. I want to do a poll. I want to see what you guys think about this. I want to see, I'm not going to disclose, but I want to see what you guys think. I want to do this on Twitter as well. So the poll is based on how you know me from the streams, who am I voting for? Or who do you think I'm voting for? Let's see what people say. Let's see what people say. I'm not disclosing who I'm voting for, but I am curious what your public perception is of who you guys think I'm voting for. I'm definitely voting. I will definitely be voting. I'm curious to see what you guys think. I'm not disclosing it, dude. I'm never disclosing it. It's going to be a challenge to not disclose while I'm live on the election day. I'll be live for like 20 hours that day. I'm going to be objective. I'm not going to disclose. So you can assume whatever you want to assume. And I will neither confirm nor deny, but I cannot disclose who I vote for. Okay, so the chat says Trump, 85% to 15%, Trump versus Harris. Again, I cannot disclose, but you guys can pontificate on what it is. George, thank you for being a channel member. He says Harris because of CARP. Interesting. You know, I can't blame people for thinking that that's a route I could go, because I do love CARP. Someone said yesterday you're going to name your kid CARP. I thought about it for a second. I was like, CARP is not a horrible name. Like, I thought about it for a second. If I had to name my kids, CARP is not a horrible name. It's not the worst one. I'm living in New Jersey. So honestly, whoever I vote for, New Jersey has gone Democrat for like ever. So I don't know if my vote even matters, whether it's Democrat or Republican, but I will make my vote and we'll see. We'll kind of figure out what happens. But New York, New Jersey, if Trump somehow flips those, that'll be surprising. And same thing with Harris. If she's able to flip like Montana or Idaho, which she's probably not going to do, it will be interesting to see how everything kind of lines up. Fool's Gold, thank you for the $100 super chat. Really appreciate that. You got Fool's Gold here, who is a Trump supporter. He says Trump Vance 2024. Thank you, Fool's Gold, for the $99. Really appreciate it. Means a lot. Someone else gave a $100 donation yesterday as well. I think the person who gave a $100 donation yesterday has a lot of Tesla, and they were very happy when Tesla went up. And so they're like, thanks, Amit, for the coverage. So I appreciate you, Fool's Gold. Thank you for the $100 super chat. Really, really, really means a lot. Gawk says, in my opinion, Amit is 100% voting for Trump based on all of his conversations on this channel. Karp is Democrat, but he's not voting for Harris. Well, Karp has come out and said he is voting for Harris. He did a Financial Times interview a couple of months ago. Karp really doesn't like Trump, guys. Have you guys seen that video where Karp talks about Trump? Like, it was a video a while ago in 2015 where he just like talked about how he's not a fan of Trump at all. But I don't know. Maybe things changed. Maybe things didn't. But so far, he said he's still probably voting Harris. I got to see if I can find that video, but it's a video from like 8 years ago, if I could find it. Tesla's pumping over 251. Okay, let's get to that. Where is Tesla? Tesla MicroStrategy at 226. Tesla is 251. There you go. Up 17%. Up 17% right now on Tesla. So getting some momentum there. 251. That means it's above 18% now, or 17.6% on the day. What a move, dude. That means its market cap, yeah, it went up 100 billion. Yesterday was 682. Today it's 800. Over $100 billion move in Tesla's market cap. There you go. $100 billion move for Tesla. MicroStrategy is a bit insane. I agree. It is a bit insane, but the market is willing to give the premium right now to that company. The net asset value premium, again, it doesn't make sense. I think they're front running it for Bitcoin's run, and then MicroStrategy maybe will underperform when Bitcoin, does what it needs to do and moves higher. But I kind of think I don't think a lot of people are just going to buy more MicroStrategy when Bitcoin goes up, which is why Saylor's been talking about how he loves the fact that people are shorting, because there is a lot of money and liquidity that can enter into their stock as a proxy for Bitcoin, even if it's already been a premiumed proxy. That premium can just get greater and greater as people want to use MicroStrategy to gain alpha. And so it seems like that can happen. You talked about your sister voting for Kamala Harris because she's a woman and you didn't seem thrilled. Well, it's not that I wasn't thrilled. It's just I wanted a better reason for why she's voting for Harris. My sister actually got clowned on that when we went to India, because all my uncles and cousins, they were like, so who are you voting for? And she said Harris. And they're like, why? And she was like, because he's a woman. They just started laughing. They're like, really? Like, that's the reason? Is that the only reason? I don't have a problem with that. My thing is just, if you're going to vote for Harris, what is the reason for why you're going to vote for Harris? If you're voting for Trump, what's the reason you're going to vote for Trump? And for my sister, it's just like, well, she's a woman. It's like, all right. And I'm sure a lot of other people are going to vote for her just because of that as well. Okay, let's get an update on what's going on with the Fed. Here's a former Fed governor, Kevin Warsh. Let's get his perspective on how Jay Powell's kind of thinking of rates, and then we'll keep going from there.
Just a few weeks away from the Fed's next meeting, and our next guest says that he was puzzled by the central bank's 50 basis point cut because he thinks it contradicts everything they've previously said about their policy. Joining us right now is former Federal Reserve Board Governor Kevin Warsh. He's a distinguished visiting fellow at the Hoover Institution.
So distinguished. It's like hard to say it. Distinguished enough. Yeah. Reeks of distinguishment.
He's wearing a tie.
I just arrived and the sniping has already begun. Becky, why don't you take control over this?
I think
you shouldn't take things as sarcasm when they're not. Yeah, you should take things very distinguished.
We are very happy to have you here, Kevin.
Just call him chairman.
Why don't you just explain what you mean?
Chairman-elect.
Why don't you explain what you mean by saying this goes against what the Fed had been saying up to this point with their policy?
So they've had different theories, Becky, about causes of inflation, the measures they use, and people in financial markets.
Shout out to Jesse in the chat with the 20 gifted. Thank you, Jesse. Really, really appreciate that. Shout out to Mr. Micro to Macro with the 50 gifted memberships. A bunch of you just got a $5 a month gifted membership. So thank you, Jesse. Jesse is up a a decent amount of money today because of his Tesla option. So I think he's feeling pretty good. Thank you, Jesse. Really appreciate that. Thank you for the 20 gifted memberships. Thank you for that, Jesse.
Markets and media have tried to follow those. They said for a long time, you'll recall a few years ago, they were for flexible average inflation targeting. So inflation, when it was at 1.7, they said, we'll get it a little higher. We'll try to balance around 2. They seem to have gotten rid of that idea without replacing it. So they don't have a broad new strategy. Then they said for a long time, what really matters is core PCE. That's what we should focus on. But it's now running at around 2.7%, nowhere near their 2% range. About a year ago, they said, well, the best measure of inflation is now what they created a new category. And they said it was core services X housing. Well, that's in the 4s. Previously, Janet Yellen and embedded in the Fed model said what really matters is wages. And so we need wages to run at 3%, which is consistent with inflation running around 2. Wages are running around 4. So all of this isn't to say that all this is to say they don't seem to have a serious theory of inflation that's theoretical and empirical. It's not obvious that they acknowledge what their role is in prices. Instead, it has something to do with wars and pandemics. I think in a world this dangerous, in economic policy where fiscal policy is irresponsible, the central bank needs to be very clear about its reaction function, be clear about its goals, and not look like it's lurching. That's what put us in the mess we have.
I understand your.
Okay, so as much as I agree that the Fed doesn't have a serious theory of inflation or what's going on with interest rates, I think we do have to give a ton of credit. Look at Tesla right here, 251, to Jay Powell for what he's done with interest rates and how he's navigated it. So, the economists can come out, and I think this guy's a Stanford economist, and they can say that the Fed is messed up and they don't understand what they're doing. But so far, although the Fed messed up in 2021, they have done a phenomenal job pivoting and being able to navigate the situation. And so I think you got to give it up to Jay Powell. And if he really nails this soft landing in a way where we have growth go up, inflation come down, and the broader market stabilized, I think he's one of the best Fed chairs of all time, given what he dealt with going into 2021 after the pandemic and all the stimulus printing and all that good stuff. So definitely do think that Jay Powell deserves some decent credit. Call me Curtis. Thank you for the $10 super chat. Can't afford 100. Not a Rocket Lab millionaire like fool's gold. Thank you guys. You don't have to send the super chats at all. I really appreciate it. I just, you guys being here every single morning is more than enough for me. So thank you all for the super chats. Really means a lot. And thank you, Curtis, for the $10 super chat. Derek says, I purchased 8,030 shares of TSLL at $8.99 yesterday. So TSLL today is running TSLL. So you bought it at 9. It's at 12. Not bad. That means 8,030 times 12 minus 8,030 times 9. It's nice 25 grand in a day. This is why the stock market's so cool, bro. Like someone can make $25,000 in a day just by being able to allocate their capital in a way that is meaningful enough to take a bet off of a volatile event like Tesla earnings. It's just one of the greatest things in the world to have this type of a market and have this type of liquidity to allow that stuff to happen. All right, folks, let's bring on a special guest onto the market open. This is someone who I actually got in contact with about 5-6 months ago. And since then, I imagine his life has completely changed as his startup seems to be one of the most exciting startups in the world. He just messaged me that he can't hear anything. So let's help him out with that in the private chat. Okay, he said 1 second. Yeah, refresh it or reload the website and pick your speakers as audio output. Okay, so you should be joining in just a couple seconds. And Jesse, you did not have to give another 20 memberships, dude. Thank you again. So we got a bunch of people getting a lot more memberships. Eliza, you got a membership. Inbound, you got a membership. Mark, you got a membership. Nick, you got a membership. Rocky, Z-Stacker. Thank you, Jesse. Appreciate it. Again, you don't have to do that, brother, but appreciate that. I think Jesse's enjoying his Tesla gains. All right, folks, let's get him on the show. Ladies and gentlemen, the founder and CEO of Kalshi, Tarek. What's up, man?
Hey, I mean, how are you?
Yeah, you're muted. You're good. What's up, man? How are you? How's life?
Good, man. How's it going?
Going very well. Are you in the Kalshi offices right now?
Yeah. It's been long nights, long mornings, long everything.
Okay, so I have a lot of questions that I want to ask you about, but the first question I want to start off with is the app's number 70 on the App Store, number 7 in finance. I would imagine there's hundreds of thousands of people joining every single day. How are you as a startup founder navigating this moment of growth right now?
It's interesting. I mean, there's a lot of ups and downs, right? Like you just go through some crazy ups and then some crazy downs, and you have to try to stay sane across all of them. I mean, I think right now it's just heads down. We have to build. We have to do fast. We have to make sure the app is working well. We're delivering on a good experience. Getting a lot of deposits. It's crazy. Like yesterday, I think we've gotten, in one day, we've gotten as many deposits as we've had, close to as many deposits as we've had as a total balance in the platform, like total amount of deposits in the platform in August. It's just giving you the type of exponential growth that we're seeing. It looks like we're skyrocketing in the App Store. So I think we're number 7 now. We just overtook Zelle.
You overtook Zelle?
Yeah, I think we're about to overtake Venmo. We're gunning for the top spot. I think we're going to try to go for number 1 in finance, and I think we'll get there.
Okay, so let's talk about Kalshi. For those that don't know, in a nutshell, what is this, and what happened a couple of weeks ago with the courts that allowed you guys to get this type of growth?
Sure. So Kalshi is a financial exchange. Think like the New York Stock Exchange or CME. But instead of letting you trade on things like stocks or bonds, the stuff that you're buying and selling on Robinhood or Schwab, we're allowing you to trade on events. So you can buy yes and no shares on any event that's happening in the world. So will Trump win the US election? Will Kamala win the US election? Will Brexit happen? Will it rain tomorrow? Who will win the popular vote? Really, any questions about the future, you can basically bet on them on Kalshi. So this is a financial instrument. You're buying and selling these shares. So if you buy a yes share, you can sell that yes share a little bit later. And as you see, for example, in this chart, in any of the charts, you have all these examples like top artists on Spotify this year. You have things on weather, climate, economics, COVID, politics, and so on. Really, any question you come up with. And some of these questions, these financial markets, people can submit them. They can suggest these markets for people to basically come and trade on them. The cool thing about the model is like each one of these shares settles to $1 if you ride 0 if not. So it's super simple. And you buy it, let's say, if you buy this at 65% and then it moves to 75%, you can sell at 75 and make a 10% profit.
Right.
So that's the model. We legalized this model in the US. We spent 3 years getting it legalized. But then the US didn't let us do elections. The government, so we sued the government over it, and we won the lawsuit in October this year.
Why they didn't let you do elections? Why did they say no to that?
It's been 100 years that elections are illegal. Election betting, election trading is illegal in the US. We were, I think, bold enough to sue the government over it, and we won, which has now is the first time in 100 years that it's legal to actually trade and bet on the US election. And so you're seeing the results. I mean, I think we're totally exploding. People want to do this, and the reason they want to do this is because elections matter. They're big. They're the most important thing that we experience every 4 years, and having a financial asset to have some skin in the game in it is extremely important.
It's really funny. I'll ask you about Palantir later, but Palantir also sued the government to get their stuff into, to get their contracts done in an interesting way, and so you're kind of following that in those footsteps. In terms of suing them, did you guys just have like the best lawyers in the world? Like, how did you guys actually win that case, in your opinion?
I believe 2 things. I think we have an insane amount of belief and conviction that we were right, especially my co-founder Luana. Like, she's never had a single doubt in her mind that we were right about the legal aspect, number 1. And then the second is the ethical. Like, is this a good thing for society, and should this exist in society? And so she was consistent all along. It's like, if the government blocks it, we have to sue them and beat them over it. So that's number 1. Number 2, I do think we have the best lawyer on earth. His name is Yaakov Roth. He's the best. And his results talk for themselves. So we did win, but it's the best lawyer, but also a strong case. Like, these markets are legal. They should be allowed. Right. And it was arbitrary for the government to block them. And now you're seeing insane amount of engagement from people to basically engage with these, like basically trade on these markets.
So I think this is one of the best ideas I've ever heard of. In a world in which you have a lot of these AI companies popping up that are using ChatGPT and just wrapping it into something and saying, hey, give us a big valuation, you guys are creating a marketplace out of anything, out of Taylor Swift Grammy nominations versus Trump versus Harris. And it seems like in America, there is this appetite for risk taking. So if you could create a marketplace out of anything that's not just stocks and crypto, that could allow people to then bet in a way that someone's allowed to make the market, someone's allowed to participate in the market, and then someone's allowed to profit on the market from 10% to 100%, that could be something that can be very, very big. So in terms of the future growth prospects after the election is done, how big do you think Kalshi can actually be?
The easiest way to think about it is like, look, I agree. People are risk on in the US. It's one of the things that made this country so great is people take risks. We are bold, right? Like we show up to a new territory and we roll the dice and see what happens. And that's, I think taking risk is one of the foundations of sort of capitalism going far. But the easiest way to think about the market size here is like, look, if people are engaging so heavily in the stock market, things like what are Cisco financials, what are, is Marriott doing well versus not, you can imagine how big a financial asset class that is even more relatable can be, right? People relate to COVID, to economics, to politics more than they relate to, financials of stocks or companies. That's what do you discuss at the dinner table usually, unless you unless you're like a deep sort of in the financial system, you're discussing all these different events. So you can imagine basically this becoming much larger than the stock market itself because more people relate to it, more people engage with it, more people care about all these questions. So yeah, no, I think to me it feels like, to me there's no question, like these types of markets are the next inflection point for financial markets. And what we've prioritized up front is like, okay, well, if this is going to be the next wave of financial markets, we have to do them in a trusting way. Like we have to build trust, we have to do it safely, we have to do it in a regulated way and legally. And that's really been our approach to this market from the start.
Do you ever think there's going to be a world where people don't want to bet on these small little events? Or you think, as you said, this argument about culture is so deep rooted versus like caring about stocks, you care about Taylor Swift nominations, that demand is never going to die out, at least in the United States?
I think it's like you think of it as a long tail, right? Like Tesla is much more liquid than sort of some small company in the Russell 2000, right? Like, and it's always, they have this long tail. So you have some tickers, some markets are insanely liquid, insanely active, a lot of activity, and then others are a bit more esoteric. The order book is wider, it's less liquid, it trades a bit more choppily, and so on. And I think it's the same thing here, right? Like the U.S. election is the Tesla of event contracts or prediction markets, and then you have this long tail, right? Things like, will when the robo-taxi be launched? That's a bit more like a Russell 2000 small cap or mid cap type company. And I think this is a sort of mix that you see, and that's fine. That's any financial markets has that. Some stuff is a bit more liquid than others, and if you buy things that are less liquid, you're taking a bit more liquidity risk, but maybe you're getting it at a discount and so on.
Okay, so let's talk about election betting in general. I'm sure you've spent a lot of time thinking about this. This is the first election we've ever had in the history of the United States where these betting markets are being taken as serious, proxies for trying to figure out who's going to win the election. Why is this a better methodology, in your opinion, than looking at polls?
Yeah, we're being asked this a lot. I mean, look, I think it's because two things. One, there's skin in the game. There's money in the line. People don't lie when there's money involved, right? Like you can trust one thing is that people are careful with their money and they don't lie with their money. They will always try to do what's right, they will always try to do what makes them more money and try to avoid things that lose them more money. So skin in the game makes these markets more truthful. And two is, if you believe in markets aggregate the wisdom of the crowds to get the right answer. Right? That's what markets do so effectively. If you compare that to polls, I mean, the issue with polls is like their accuracy has been decreasing over the last 10 years. So average polling accuracy has been decreasing. They're biased. There's a lot of conflict of interest. You're seeing some polls were saying that Hillary Clinton had a 90% chance of winning in 2016. That's a crazy statement in retrospect. So markets do a better way to calibrate across, like they calibrate better across all the types of bias. They're unbiased. Markets are truthful. The last thing I would say is you don't need to trust these over polls. It's another differentiated source of data. You can look at these, you can look at polls, you can look at what people are saying. And that's yet another piece of information that you can use. And the whole kind of set of information that, is being promulgated on Twitter. But I really believe in these markets as a way to combat misinformation.
Is there a risk of manipulation? Like the Harris team hires a bunch of people to just bet on Harris so her numbers look better on Kalshi. And do you guys have a check against that?
Yeah, we definitely have checks against that. So regulated platform, we know who's trading, we know who they are, where the source of fund is. If they're doing something weird, we'll flag them immediately and they can be criminally prosecuted. We report everything to the government. It is really a safe and robust marketplace that's federally regulated. We regulate like the New York Stock Exchange or someone does insider trading from Goldman at the New York Stock Exchange, they'll be flagged and they'll be prosecuted. Same thing here. But more importantly, every time someone tries to manipulate these markets, what happens, they move the price a little bit and then it comes back down, because markets self-calibrate, right? They do a very good job at, if the right answer is 50 and it moves to 55, there's a huge incentive now for arbitrageurs and traders to bring it back. And so the only thing that happens when someone tries to manipulate is they just lose money and they don't succeed at it. It's much easier to go and manipulate polls. That's a much better use of money and spend. Just go fund a bunch of polls that, you know, will say that you're winning. And people are probably doing that. Actually, they are already doing that right now. As you see, you have all these polls that are saying completely different things right now.
This is why I like it, because it's like you got a bunch of polls across the entire country that are obviously being manipulated for both sides to be able to make it look like that they're winning in a certain poll that appeals better on CNN or Fox or whatever it may be. Whereas you guys, even if there could be some form of manipulation that happens, it self-regulates because it's a market where money's on the line. With polls, there's no money on the line. There's just people that say, I'll vote for them, I'll vote for them. And a lot of times people are lying on the polls, right? Because they don't want to admit they're voting for a certain candidate. It seems like this is solving that problem at a deeper level.
Yeah, I mean, I think yesterday there was the VP JD Vance was talking on Theo Vaughn on the podcast. They were talking about Kalshi and the odds, and JJ was saying that he does agree with the odds on Kalshi. And I think that he made a point about like polls have historically been bad because people either just lie or they don't answer. They just don't pick up the phone, and there's a bias on who picks up the phone and who doesn't. And he's saying these markets actually they incentivize people to not pick up the phone but place a trade, because if they believe something is going to happen, they'll make money off of it if they're right. So, yeah.
How do you guys make money?
We take transaction fees. We take trading fees. So we take 1% to 2%, like the New York Stock Exchange. We take trading fees. But right now, actually, the election is free, so there's no fees on the election. And we're also paying interest on your position. So if you put cash and you use it to bet on an event, that bet is paying you interest as it's outstanding while you're waiting for it to pay out. We're paying 4.1% variable interest right now.
So one of my friends signed up today on this, and they got $20 as a bonus when they deposited $250, which is awesome. And now you guys are actually paying interest on that. And the economics on that, I imagine you're getting interest from some of your cash, which is why you're able to pass over the interest to users.
Yeah, the exchanges are very profitable, so we make money on the transaction fees, but we don't need to. For me, it's always been like, let's promote trading and allow liquidity to kind of foster rather than. We don't need the interest from people. People are entitled to their interest, and we pay it back to them. I think that's fair.
Right. Charles Schwab personally invested in this, right?
Yes. We have Charles Schwab, Henry Kravis, Sequoia, Y Combinator, Ron Conway, and a few others.
Why do you think Schwab actually invested?
He actually told me like he really loved the idea already. First time he heard of it, and he felt like it was similar to how when he started Schwab. It could really revolutionize the way that the average American or people engage with the financial markets. He really feels like this could be the next frontier. So he's really, really excited about the idea very early.
Yeah, no, it really feels like one of the most exciting ideas in the world. I would imagine that you guys are kind of head down focused. You're not really thinking about IPO or the next fundraise. You guys are just like, let's cement our foot in the ground right now and beat poly market and keep doing what we're doing.
Yeah, right now it's all about growing. It's all about staying focused and so on. I mean, I think. Yeah, I mean, we're right now, we're the only sort of legal regulated one in the U.S. So that gives us a huge sort of upstart because we can cater freely to to Americans without kind of any restrictions. And I think within the next 10 days, I think we can really dominate the U.S. market, and I think we will.
So here's the question I have then. Like when the election is over and this kind of big epicenter of attention is gone from Kalshi that's happening right now, what is the plan to grow after that? Because as a startup, you have to continue the growth. So is there any idea on how you maintain momentum, even if there's no election happening?
Yeah, I think, I mean, absolutely. I think the thing that I say is like election is a bit like the Super Bowl. Like it's a really interesting event that happens once, in a while. It attracts a lot of attention, attracts a lot of people, and allows you to acquire customers and get them used to the brand and so on and so forth. And then after that, it's all about the other events. I mean, for example, DraftKings doesn't make most of its money on the Super Bowl. It's actually the stuff that's happening on a daily basis and a weekly basis. And it's the same thing here.
That's a good point.
So we're offering a whole set of things around economics, entertainment, politics, policy, weather, climate, and so on that are like daily, basically. And these are the things that people engage with on a consistent basis.
Yeah, that's fair. All right, Tarek, this was awesome. Last question I got for you. You worked at Palantir, and now you're starting your own startup. Can you give us a little bit of what your experience was like at Palantir?
I was there for a short period of time. I mean, Palantir is great. It's a very low management company. Like it's very flat. It's very unstructured, I would say. And actually, Kalshi is similar in some regards. We don't have a lot of management. We try to avoid management. It's just very flat in nature. And so I think that's one of the learnings from there. Pretty aggressive as well, like very similar culture in terms of how aggressive we are and move fast. And yeah, you mentioned Palantir sued the government, SpaceX sued the government. It seems like suing the government sometimes is just what you need to do to make sure that you realize what you're trying to build. And not many people like to do that. It's not for the faint of heart. It's a tough thing to do.
I love it. All right. Awesome stuff. If you guys want to follow Tarek, his Twitter is in the chat. I know you're super busy, so thank you for taking the time to chat with me today. And I'll talk to you later. Best of luck to Kalshi.
Thanks so much, Amit. Talk soon.
Bye. All right. Talk soon. Bye. All right. There you go, folks. Super cool stuff. I mean, again, these betting markets are getting bigger and bigger and bigger. And you would imagine that if the risk appetite continues to grow for the broader markets, look at Tesla, 20% up on the day, then the betting markets also will continue to grow, and you'll have more people that get excited around it. Cool. All right. There you go. Tesla right here at 254 right now. MicroStrategy at 227, Coinbase at 205, SoFi at 1113, Rocket Lab. Wow. Rocket Lab 1152. Oh, I thought that said SoFi at 1150. Rocket Lab already got to 1150 in the beginning of the day. Rocket Lab's at down a little bit from $12. SoFi still holding 11, which is nice to see. Palantir still holding 43. Google down just a little bit. Robin at 2702. MicroStrategy again, kind of 52-week highs right here. And Tesla's the story of the day. Up 20% right now on Tesla. All right, that is pretty much it for me, folks. Let's do word of the day, and then I'll be back on the market close. We do have Karp today on CNBC, so it'll be nice to see Karp talk after a couple months now, and he'll be talking about that new, that new partnership with L3 Harris, and we'll see what Karp has to say with L3 Harris. That was announced yesterday. Word of the day is doggedly.
Doggedly. Or doggedly.
In a persistent or tenacious manner. The student doggedly pursued her goal despite numerous setbacks. The athlete doggedly trained every day, even in harsh weather conditions. All right, doggedly. I feel like this is similar to when people say, "Do you have that dog in you?" You know, so it's kind of similar from that perspective. But doggedly, I've never heard a word doggedly. I've used the concept of having that dog in you, but doggedly in a persistent or tenacious manner. Well, Tesla's being very doggedly today, dude. Up 20%. Let me see where the calls are before we end it out. So that 230 call on Tesla was up 700% in the beginning of the day. Today, that 230 call is up right now 824%. The 240 call is up 1,290%. And the 250 call is up 1,500%. It's pretty incredible, dude. Pretty damn incredible. All right, there you go. Thank you, everybody, for joining. I'll see you guys back on the market close, and we'll keep going from there. Bye, everyone. Have a good one.